morning to all of you. At the outset, I welcome you all for this second day of the refresher course on tax audit. A special welcome because it is a Sunday today. Generally, we keep a day off for all other things. When me and the speaker were discussing as to the choice between having a program on Sunday morning and Monday morning, we thought a Sunday morning will be better for all good reasons. So that is the reason we are all available here to deliberate on the tax audit, where the topic very important because many a time the smaller things are being ignored or kind of skipped, I will say, maybe because of the pressure, the last minute thing, for whatever reasons we call. But I felt that should not happen, and we should kind of see that the audit has to be complete in all aspects so that the integrity is maintained in the audit what we do. So that's why when me and the speaker were having the discussion, we thought that the audit documentation and the standards on auditing kind of also be covered so that people know that these are the things also which need to be covered when we are completing the audit. Also joining with us, the chairman of the Direct Tax Committee, C. Naresh Chandra Gelli sir. He should have been there with us yesterday, but since we had another chief guest, our past president, R. Balakrishnan sir, we thought we'll kind of take him to day 2. Gelli sir, over to you so that you can share your thoughts and then we take things forward.
Good morning, members. Good morning, Chairman, BC Jain, Abhishek Murli, Secretary, and Speaker of the Day, P.A. Gururaj Acharya from Bangalore. Friends, tax audit is one of the very important assignments we all undertake. This is a yearly feature we've been doing for quite some time. But most important aspect of tax audit is that we need to have a lot of documentation to be built up. And in the present day context, as you see, the Government of India is depending on us in our reports, and they also expect us as their supporters, or we're taking care of their assignments and compiling the data and submitting it to them. As we've been told a number of times, it's only 2-3% of our returns have been scrutinized. The amount of confidence levels they have is very high. But over a period of time, the institute has also come up with something similar to what we call a peer review board. They also have come up with a tax audit quality review board, and that is slowly going to pick up. And I think this year onwards, it will be more detailed they will be getting in. And there are some criteria which they fixed for the purpose for which the tax audit quality review board will review the files of our members. And those are the entities which are having listed entities and debt securities are listed or to be listed on stock exchanges in India or abroad. Banks and financial institutions carrying on insurance business, all commercial industrial business enterprises whose turnover exceed 100 crores in the financial year, or holding and subsidiary companies of these entities, and such other category of persons which, in the opinion of the board, make the public vulnerable due to susceptible to non-compliance of reporting requirements. So probably to start with, the review could be for a major entity, but over a period of time, the institute may look in for more number of files and more type of assignments. But if there is any reports coming on papers and newspapers on suo motu basis, also institute can pick up those files for a review. At that point of time, and if our documentation is not done or is not satisfactory to them, probably these situations will be referred to disciplinary committee. So best thing is, I think Chairman has done a great thing of organizing an event like this, and with a speaker like Gururaj, who is a specialist in taxation, I'm sure we'll have a great session today. I thank Chairman for giving the opportunity, and I welcome all the members for this webinar. Thank you very much, Chairman.
Thank you so much, Gelli sir, for a short and nice prelude to the program. And I also recognize the presence of C. Panaraj sir, who is joining as attendee for the program, one of our colleagues in the Regional Council. Abhishek, over to you to introduce the speaker.
Yeah, thank you, Chairman. A very good morning to all the viewers. At the offset, I'd like to wish you all a happy Friendship Day, and very happy to see large turnout despite an early program on a Sunday morning. More than 350 people have come and the number is climbing. So that's an excellent motivation. So be it as a speaker or be it as an organizer, we always want to see that from the members, and we are seeing that in large numbers today. I also like to thank C. Naresh Gelli sir, for a very lovely and short and sweet introduction that he has given in a welcome address. He's touched upon many important factors. In fact, as chairman rightly said, he should have been there yesterday, being the chairman of Direct Taxes Committee. But not only that, he is always a person who's behind the scenes, given several decades of experience he has had the leadership of the institute. Whenever we need any help, be it chairman or me, we always reach out to him. So all of our programs, be it our CA Day celebrations, anything, the quiz that we had, all the credit goes to Gilly, sir. He is a big support for us behind the scenes. So I thought I'll acknowledge him at this opportunity since he's present here. I also now have the privilege of introducing our very, very erudite speaker and popular personality in our professional circles, CA Gururaj Acharya. He hails from the temple town of Udupi. He's brought up from the Iron City, Bellary, and now he is well settled in the knowledge city of Bangalore. He qualified as a chartered accountant after completing his articleship in Bellary, and he is now a senior partner in his own firm in Bangalore, and he specializes in corporate finance, corporate taxes, and company law. He's a consistently academically brilliant person. He secured the first rank in Gulbarga University in his BCom. In CA, he got the 21st rank in his Inter. In final, he got the 10th rank. In his ICMA, in the Inter, he got the All India first rank. And in the final, he got an All India third rank. Really amazing personality, academician also. He's a member of the Bangalore Financial Reporting Review Group, formulated under the Financial Reporting Review Board of the ICAI New Delhi. He was a director on the Board of Directors of State Bank of Mysore, a member of the Karnataka State Level Audit Advisory Board, co-opted member of the Expert Advisory Committee, Committee on Auditing Standards for Local Bodies by the ICAI, and in fact, he's an author also. He's authored a book titled Internal Financial Control, Practical Handbook on Audit Report on What Can Go Wrong. It was published, in fact, by the KSCA Association, and he's a resource person on accounting standards, auditing standards, Companies Act, corporate finance, and needless to say, tax audit as well. He's an excellent speaker, someone I've had the privilege of listening to for many years, and I'm sure many participants as well are looking forward to his wonderful session. I don't think any session that he does is anything less than wonderful. We are very lucky to have him. Thank you so much for agreeing to join us and present to our members, sir. We welcome you, and we really looking forward to your session. Thank you so much.
Yeah, Gururaj, you can take it forward, and maybe a 5-minute break at any time between 11:30 11:45 you can use.
Sure. Thanks to the wonderful Abhishek, the secretary. Instead of calling him as the secretary, I should call him as the smiley of SIRC. I'm just thinking, because your smile is so infectious that everybody on the screen here is smiling. I mean, I know Dungarchan is always a smiling person, but I think Abhishek's smile is something very infectious. Now, instead of having the smiley in my WhatsApp, I'll maybe keep Abhishek. So whenever Abhishek is, you can take it as a smiley. So thanks, Abhishek, for that wonderful introduction. And of course, to Naresh Gilli, who's a good friend of mine from Hyderabad. We have had interactions for a long time. I'm happy that you are here as in the position of the Direct Taxes Committee Chairman for my session. And then, of course, maybe if there are 2 smiles to be added in the WhatsApp group, it should be Dungarchanji. Always vibrant, always energetic, and we are lucky to have you as the chairman of SIRC at this testing times. Now, a person who is very good in technology. I heard you talking. Very few people who are leaders are also research persons. So you are a resourceful leader in that sense. So I'm very happy that I'm sharing the screen space, if I may call today, with the erudite members like all of you. I have to acknowledge the presence of my great guru, who I call as the Dronacharya for me, Mr. Pannaraj. Although you call him as a colleague, for me, he is my guru under who I learned accounting. I mean, the advanced accounting in that sense. When I prepared for my CA intermediate examination, even now I call CA intermediate examination accounts as one of the toughest accounting subject, where you get into reading of empty containers account, so many things which even now we don't use that. If somebody asks a question on that at this point in time, it will be very difficult. But Pannaraj was the only resource available for us in Bellary, and he took up the lead of teaching only 4 or 5 people. So he was I mean, I know in Chennai we could have gone with 300, 400 people in a class, but only 4 or 5 people. It was not economically viable for him, but just for the love of the subject and love of the pupils that he had trained us. And you see the training that he has given. I mean, one of the product is in front of you. So I acknowledge the presence of my guru, Sri Pannaraj, on this particular platform. COVID comfort. I mean, if I have to coin this, COVID comfort, maybe is the terminology that we can use. On a Sunday morning, I see 412 participants. Probably they're all brushing their teeth, some of them, but still watching. You know, that's the beauty of this particular COVID comfort, if I may say. I am sitting in the comfort of my cabin. If it were to be a normal session, all of us had to gather in an auditorium and maybe go through the irritations of the traffic, so many other issues. But here we are in court in the COVID comfort. I mean, chartered accountants can call it as COVID comfort because we are used to quarantining. I mean, our course itself has been such that we had to lock ourselves up for 3 or 4 months. I'm sure our course has trained us enough for I don't know. You see how thoughtful of our examiners, if I may have to say, or our central council members, right from the beginning. They have made the course so tough that unless you quarantined, and some of them have been multiple times quarantined. So in that sense, I think this quarantine is a very easy examination for the chartered accountants. But today, we also have a semblance of examination. I was thinking that I'm going to talk to you for 3 hours, which is again equivalent to the examination paper. 3 hours is not very much considering the 3 hours examinations that we used to write. But now it is 3 hours, 15 minutes. In these days, they are given additional time of 15 minutes for reading the question paper itself. But in our time, it was only 3 hours. So I said instead of 3 hours, 15 minutes, I will talk only for 3 hours.
Gururaj, here you can go for extra time. In the exam, it is not allowed.
That is also true. But let me see how many of them will actually go to sleep and from their bed they will listen the program. But I don't mind if they are sleeping and listening, as long as they're listening and gaining in the process. So what I'm going to do in my session is I'm not waiting for your questions. So I thought I will pose questions, and I have already prepared a set of 18 questions. And as and when we go on answering those questions, we will actually unwind the intricacies, if any, of the tax audit. And Mr. Dungarchand was very, very particular that I should talk less on taxation, concentrate more on audit. After all, if you see tax audit, as the name itself suggests, audit is the action, tax is only an adjective. I mean, if you have to see, if you are an English a person who likes English, tax audit is the action and tax is only an adjective. Audit in relation to tax is what we are supposed to do. But somehow over a period of time, we are so fascinated by taxation that we are very, very, if you say 40A3, if you say 40A1A, even in I'm sure some of them who have just now got up, in their coming out of a dream, if I ask 269SS, they will say, yes, I know what is 269SS, 269ST, just the number. But if I use the same thing for Ind AS 103, Ind AS 116, or Ind AS or let us say SA 320, SA 310, SA 530. If I put those numbers, then one has to probably have a look at the book before they actually answer that particular question. So unfortunately, audit has taken some amount of backseating in relation to taxation. So that is why I think DC Jain was very particular that I focus my efforts on audit aspects of tax audit. That is what I will be doing in my session. But pardon me, DC Jain, if I may have to touch some elements of taxation here and there. After all, I also love taxation. So in that context, let me start my formal presentation. I'll put up my slides.
Visible.
Yeah. So thank you, DC Jain. for inviting me and asking me to talk on the audit perspective of tax audit. In the process of actually talking, I always say one important quote. It was not when I was taught, but when I was teaching that I learned a lot. That is a quote which I like the most. I know Mr. Abhishek Murali is smiling, and your father always likes to give a quote. I have again been inspired by him to learn a lot of quotations or give a lot of quotations that way. So I would like to reiterate that it was not when I was taught, but when I was teaching that I learned a lot. Honestly speaking, in the process of preparing this, you get to learn more than all the 500 participants put together. So that is the beauty of actually teaching. So I would say if you are a strong learner, learn to teach. So that's the best way to learn. So having said that, let me start my presentation. As I already told you, tax audit is a sum total of taxation and audit. It cannot be only taxation. And if you have to be actually doing a tax audit, you cannot talk about only taxation. You'll have to have at least three books, which is, I'm talking of the source books, if not the other textbooks and the guides, the Income Tax Act, the Handbook of Auditing Pronouncements, and the guidance note on tax audit. When I was showing this to my office, they were telling that Income Tax Act plus Handbook on Auditing is equal to guidance note. When I say, if the moment I say it is equal to guidance note, then probably people will read only the guidance note and forget about the Income Tax Act and the standards on auditing. So that is not the spirit with which we have to do, because there are certain elements which we need to learn from the Income Tax Act, certain elements from the guidance note, and a gist of that is given in a book called The Guide, which is actually a guide for the chartered accountants who have to do the tax audit. And all of us know, when a standard is a mandatory thing, a guidance note is only a guide. It is only showing you how you have to do your audit. And in case you don't follow some of the elements of a guidance note, you can do that provided you have a sufficient reason for a deviation. So a reason should be there for you to deviate. Otherwise, you have to follow with the guidance note, because it is prepared out of the experience of lot of members and lot of members who have actually specialized in this particular area. So please read all these three books before you start your tax audit, and I'm sure all of you are doing it. But what happens is more focus is given to the Income Tax Act, maybe less focus is given to the audit and the guidance note. Maybe some of them are reading the guidance note, but when it comes to the Handbook on Auditing, if you go to any of the, how you know, I always keep telling this in my office, how you know that you have read this book? If that book, which you have is all white, all white in the border, that means you have never opened that book. When you see the book here, of course, this is looking slightly whiter in income tax because it has just come 15 days or 20 days back when the Income Tax Act. When it comes to the guidance note, my guidance note would almost be a book which is actually half torn. We would have referred that book as much. You don't have to really today look into only the book. You can also see the soft copies available. But for my generation, I think people are more comfortable reading the book rather than the soft copy itself. But of course, we have to get tuned to reading the soft copies. When you may be surprised to note that the big fours, if I may have to call, or the large audit entities, the tax audit, they have got different departments, the consultancy department, the taxation department, the audit department, and so on and so forth. If you ask which department does the tax audit, which department does the tax audit, definitely it is not the consultancy division which can do the tax audit. It should be either the tax department or the audit department. And let me tell you, the large entities, the tax audit is done by the audit department and not by the tax department. So in fact, the focus should be more on audit than on the, of course, focus should be on the audit, considering the elements of taxation. So that is the importance of audit aspect of tax audit. Yeah. Now, apart from these three books, you also have to take into consideration the Code of Ethics. And all of us are aware now, the Code of Ethics has got revised it has got revised and made applicable from 1st of July 2020. We also need to know the various ethical aspects. I always keep telling, if an auditor has to audit, he has to consider knowledge, training, and experience. Now, these are the three important things when I make a professional judgment. When I make a professional judgment, a judgment in relation to my profession has to be done considering my training, my knowledge, and my experience. Training coming out of, if at all for my profession, it is the article training. And why article training? The whatever Panaraj taught me during his classes were also sort of a training, a classroom training, an on-the-job training called the article training in our office, plus the knowledge which you derive out of reading the books or by discussing with knowledgeable people, plus experience. So the word professional judgment has been defined in our standards on auditing as an application of these three: training, knowledge, and experience, using the professional standards to a given situation. The professional standards for arriving at a professional judgment, there are three standards which we have to look into when we are doing the audit. One is the accounting standard, the second one is the auditing standards, and the third one, which we may not know, is actually called the ethical standards. The ethical standards. So accounting standards, auditing standards, and the ethical standards. The ethical standards actually have to come from within. From within. However, all the good practices have been codified in a particular book, and that is what is presented in the manner of code of ethics. And this code of ethics is what is revised for the several times. It has got revised, and the revised code of ethics, which is applicable from 1st of July 2020, I may not get into the details, but for doing the tax audit, what are the various things is what I will talk as and when I'm talking about. This has got 3 volumes. Volume 1 talking about code of ethics, volume 2 on code of ethics, volume 3 talks about the case laws. Now, what are all the various chartered accountants? We could also learn, when I talk about experience, somebody's bad experience, which is made published in the case law references in this particular book. Maybe they have not communicated with the previous auditor. All the cases which have been taken up by the disciplinary committee has actually been compiled and given in this volume 3, which needs to be referred. His experience, his bad experience, is what I have to avoid when I am doing my tax audit or any audit for that matter. So code of ethics. However, a lot of things have got changed. I'm sure a lot of sessions have also happened with respect to this. More has to happen, but 3 important changes which have happened have been deferred considering the COVID situation. And what are those 3? One is the NOCLAR. The NOCLAR is non-compliance of laws and regulations. Now, if an entity, if an audit, in fact, the code of ethics has got 2 parts. The part 1 deals with chartered accountants who are in employment. They call it as in service, and chartered accountants who are in practice, who are in public practice. So if you are seeing 2 numbers, 260 and 360, section 260 deals with how an employee chartered accountant should respond to the non-compliances of laws and regulations with respect to a company in which he is working. And section 360 talks about how a practicing chartered accountant should deal with a client who is a habitually non-compliant with the laws and regulations. So this has been slightly postponed. I mean, it goes to the extent if a client is habitually non-compliant, then he may not be a good client for you. So you better don't continue. That would be the worst case situation. Of course, in the initial stages, you will have to mend him, guide him to say comply with all the rules and regulations. In spite of that, if he doesn't do, the ethical standard says it's better to disassociate with such a client rather than to continue with him, and you also become a better in the non-compliance. Now, as far as the fee is concerned, there has been a very significant change where they talked about how an auditor could become a sort of an interested party. They talk about various threats. One of the threat that could be talked about, if my fee from a particular client is more than 15%, if my fee out of the total fee, let us say my fee is about 1 crore, and the total fee that I collected during the year was about 1 crore. And if I'm collecting more than 15%, that is 15 lakhs and above from a particular client, maybe I'm sort of intimidated. I'm having an interest in him. So therefore they say you will have to take additional precautions. Now there what they have done is they have segregated the audit entities into the audit clients into two types. If the client is an entity in which the public interest entity, that means where the public is interested, it need not necessarily be listed entity. It could be an entity where there is a large borrowing from a bank and it is not listed. It could also become a public interest entity. Where the public funds are taken by that particular entity, it is called as a PIE, public interest entity. And there is another type of client who is not a public interest entity. So they have told in both the situations how, as an auditor, if your fee is more than 15%, how you should approach these two types of clients where your interest is more than 15%. Maybe you are intimidated because if he goes away, you may have a sudden drop in your turnover. So therefore, you are not independent. So that's why the additional safeguards have been told. But I'm not getting into that aspect today. Just I wanted to give that as a prelude today. They have just anyway kept that aspect in abeyance. Maybe it will be put into practice immediately after the COVID vanishes. And the third interesting aspect is how does a chartered accountant deal with on ethical principles with respect to tax services with respect to a client. There, the Code of Ethics goes on to say there could be various types of services that the auditor could render. One of them is the income tax return filing. The second one could be tax computation, that is the preparation of the computation of total income, wherein I prepare the current taxes and deferred taxes. Then the third one is the tax advisory, and the fourth one is the tax planning, and the fifth one is the tax representation. So they've gone on to make a segregation of 5 types. This was there in the earlier also, but what can be done and what cannot be done. Now they went on to say, with respect to tax filing, with respect to income tax return filing, it is a post action. Whatever has been furnished in the financial statements, you add certain things and you deduct certain things, and you actually prepare your income tax return. And the computation of income is also provided to you. Let me be very clear. The computation of income is also provided to you. The financial statements are provided to you. You're only filling the income tax return because you are knowledgeable enough. So therefore, you can continue to do it. Now, when it comes to the second aspect of preparation of the computation of income, the statement of total income, in fact, the ethics say that you are not supposed to do the computation. It should be made available by the client or an internal auditor or some other chartered accountant. The statutory auditor who is doing the financial statements should not go into the preparation of the current taxes, provision for taxes or deferred taxes. The reason being that they say that there is a self-review threat. Now, what is a self-review threat? If you are computing it and when you are doing the audit, you may say that I have only done, so therefore I will not review it. Or I will say I cannot make a mistake. Whereas, it's a human tendency to, if somebody else has done, as an auditor, you are supposed to check if there are any mistakes. So they say that with respect to computation of income, it is not correct on the part of the auditor to actually do the computation of income. Now, point number three is tax advisory. Tax advisory, they have segregated tax advisory into 2 things. You are advising the client on a particular matter which is already decided, or you are advising him on an undecided matter. If it is a matter which is already decided, you can always, even as a statutory auditor, tell him that yes, this is possible, this is not possible based on a particular case law. So that is not barred. However, if you are deciding on a matter of tax, which is, he comes to you for a consultancy and you are giving your opinion on a matter which is not decided, it could tend towards the tax planning. So both the tax advice on a matter which is not decided or on a tax planning, the auditor is not supposed to, the statutory auditor of that particular entity is not supposed to do that. And the last aspect is tax representation. So when it comes to the tax representation, the Code of Ethics is very clear. You shall not, as a statutory auditor, appear before any court of law. any court of law on behalf of the client for whom you have done the statutory audit. So that is the point that they have told there. And then what is a court of law? Whether the commissioner of appeals and assessing officer, you can always get into the assessment level. But can you go before the commissioner of income tax appeals? Can you go before the tribunal? In my opinion, tribunal is a court of law, so therefore you cannot. Commissioner of income tax appeals, you may go ahead, although the code itself has not very, our code is mostly in terms of principles. It does not tell you what you shall do, what you shall not do in that sense. However, it is more in terms of a principle. So it says before a court of law, you shall not proceed. So strictly speaking, they say that this will lead to a threat called the advocacy threat. If you are acting as an advocate on behalf of the client, to that extent, you are pre-opinionated or things like that. So that's why they said that avoid going in for tax representation before the court of law. Yeah, I now start my 18 questions. My 18 questions based on which we will go on unfurling the various audit aspects of tax audit. My first question is very interesting. What is meant by deemed income? Give a list of deemed income. How is it connected to tax audit? We'll talk about a bit later on, because I have to talk about, I told DC Jain also that I will have to talk about some elements of taxation before I get into audit. So what is meant by tax audit? Give a list of deemed income. Or what is meant by deemed income? Give the list of deemed income. Now, this is a wonderful list which I have prepared, which you can see. What could be the various deemed income? The presumptive income. The presumptive income, when I say whatever is the turnover, whatever is your expenditure, I don't care, as long as you are giving me 8%, 6% or 50%. When 8%, 60% for business cases, 50% for professionals. That's covered under 44ADA for professionals and 44AD for businessmen, 44AE for transporters and so on. Now that is a deemed income. Items falling within the scope of 28 could be actual income, or sometimes it could be deemed income. So what could be the deemed income? The deemed income, when section 28 is a charging section which goes on to say, all the business income derived out of business, non-compete fee received. Now, whatever comes in money is very clear. Whatever comes in the form of a entry through the bank account is no doubt an income. But what could actually come other than in the form of bank and therefore still has to be considered as income is a perquisite arising from the business or in exercise of a profession. When I was telling this to my some of my articles, what if your client is giving you a biscuit? Is it a perquisite? Then it depends on what biscuit. If it is a glucose biscuit, then you may eat it and digest it and go ahead. But if the client is giving you a gold biscuit in lieu of your fee, appreciating your, you have done an excellent job, you have done my particular assessment or tax advisory in that sense, not as a statutory auditor, that is, you have won over this particular case, so I'm giving you a gold biscuit. So then that perquisite arising from the profession, from exercise of a profession, is also deemed to be a income. So fair market value of inventory on the date of conversion, or fair market value of the inventory treated as capital asset, is also considered to be income. It's considered to be deemed income. Now, why we have to talk about this is, all of us were aware for a long time that if the capital asset is split into stock in trade and made into saleable item, if a capital asset converted into stock in trade, we have a different rule. Now, what is that rule? Under section 45, subsection 2, if the capital asset is converted into stock in trade, there are two levels of computation. Capital asset getting converted into stock in trade. So first level is you compute the capital gains, and the stock in trade, when it is sold, the difference between this value and this value is taxed as business income. And both of them are paid in the year in which the stock is sold. So under section 45(2), when a capital asset, I'm just using this as a capital asset because a big land, I had 10 acres of land, I converted it into sites and I am selling the sites. So that is a case when the capital asset became sites, when the huge pack of land became sites, I will call it as a capital asset getting converted into stock in trade, compute the capital gains. And then when the sites are getting sold, I compute the difference between this value and this value as a business income and compute my business income. Now, together, the capital gains and the business income will be paid in the year in which the inventory is actually sold. That is 45(2). The reverse of that, what was inventory became a capital asset. Let us say I was constructing 100 flats and then I decided that, and all the 100 flats were there as my stocks. And now I decide that I will keep 5 flats for myself, as a guest house for my staff. So then what I have to do is whatever was actually the stocks will now have to be converted into fixed assets. Now for accounting purpose, accounting standard 10 deals with that particular situation, read with accounting standard 2. The inventory going out, property, plant and equipment coming in. As far as income tax is concerned, that was silent. Now they brought in fair market value of the inventory on the date of conversion is or treated as a capital asset. Fair market value of the inventory on the day it is treated as a capital asset becomes an income. There is no two stages. Why there is no two stages? Because inventory, when it is converted into capital asset will never be sold. Capital asset is meant for own use. So therefore, by logic, the moment you convert your inventory into capital asset, that particular capital asset has to be, whatever is the fair market value becomes your income. Now let us say I had this 5 flats, and let us say for our understanding, 100 crores I had spent to construct 100 flats, and so for five flats which I am retaining, I am having 5 crores as my opening stock. Okay, 95 I've actually sold. So 95 crores as my opening stock, and today's market value of that is about 8 crores. 8 crores. So straight away 8 crores will get added as a business income. 8 crores will get added as a business income. You will not get a deduction of 5 crores in that sense. The section does not talk of getting that 5 crores as a deduction, but by presumption in the accounting itself, you have opening stock of 5 crores, closing stock will be nil. So therefore, when you credit to your profit and loss account 8 crores, your 5 crores of opening stock is already becoming 0. So you're actually taking the 8 minus 5 as the income. So that is how section 28 talks about a deeming provision. Then sub-registrar value of the sale consideration. Sub-registrar value of actual sale or actual sale consideration, whichever is higher under section 43CA or 50C. So this is also an element all of us know. And now you are allowed to have a 5% variation, or now from next year onwards, from the current year onwards, you can have a 10% variation in relation to the sub-registrar value. So even if your actual sale consideration is only 70 lakhs, but if the sub-registrar rate is 100 lakhs, 100 lakhs will be taken as your sale value, and this 700 minus 70, 30 lakhs will be a deemed income in your hands. Although for accounting purpose, your income will be computed in relation to 70 lakhs minus the cost. Now that is a deemed income. Employees' contribution received towards ESI, PF under section 36(1)(5)(a), read with the section 224(10). Now why two sections are talked about? Whenever I am deducting the employee's contribution of ESI and PF, under section 224(10), it is becoming my income. And it is allowed as an expenditure under section 36(1)(5)(a), if and only if I am paying it within 15th of the next month. So that is very, very clear. If you pay it on the 16th, then that particular expenditure is not allowed. However, some of the courts, including the Karnataka High Court, has held that this particular expenditure, even if it is paid belatedly, as long as it is paid within the due date of filing the income tax return, it is allowed. That's a judicial argument. But when it comes to the act in particular, we are very clear that whatever gets deducted from the employee becomes your income. And it will not be allowed as a deduction if it is not paid within 15. So to that extent, it becomes a deemed income. So profits chargeable under section 41 being a remission of a liability, share premium received by closely held company from residents for share issue in excess of its fair market value taxed under 56(2)(7)(b), whenever a closely held company is actually issuing shares and receives a premium in excess of its fair market value as told in rule 11 UA and all those stuff. So to that extent, it becomes a deemed income. So that is a concept of deemed income. Advance received on capital assets forfeited under section 56(2)(9) is also a deemed income. Money property received without or for inadequate consideration. what we call it as a deemed gifts or a backdoor gift. 56.2.10, I have received money, property, or immobile property and I have not paid for it, or I have received something, some property or immobile property, and I have paid less than its fair market value. In that context, it's an inadequate consideration. The money received or property received without or for inadequate consideration becomes a income. Exceptions provided for relatives, mergers, for trusts in which the relatives are the beneficiaries and things like that. Amount borrowed or repaid on hundi, primary adjustments in transfer pricing under section 92CE. The moment I make a primary adjustment, it calls for a secondary adjustment. So what we talk about primary adjustment is, let us say I have an international holding company and I'm doing the work for a holding company. There is a transfer pricing adjustment which I have to do. If I'm doing on a cost plus 10% model, and after I do the transfer pricing study, it is actually coming to cost plus 13%. So 3% for my accounting income, I charge only cost plus 10% as my income. The additional 3%, I will only add it in my computation of income. Earlier, we were very happy adding it in the computation of income and paying income tax. Now, the department says this 3% should be brought into India, because the moment it comes into the books, this 10% and 3%, 13% will be allowed, will be remaining with the company as reserves and surplus. Now, if that has to be paid back to the holding company, it has to be paid by way of dividends, and that dividend will actually be subject to dividend tax. So on this 3%, initially, the company was not paying dividend taxes. Now they said, you'll have to make a secondary adjustment, that is bring it into India. Or if you don't bring that money into India, you will have to consider as though that is brought into India. And on that also, you'll have to pay taxes. However, they have put an end to this by saying on the primary adjustments, you just pay 18% and you don't have to make a secondary adjustment. So I'm not getting into that. So that is also a deemed income. Now, the next thing is GAR. I'm not getting into the GAR provision because it is, the GAR is not deferred. Reporting of GAR in 3CD is deferred. Deemed dividends. Whenever a closely held company gives a loan or an advance to a shareholder who is interested, that means who is having a interest of more than 10%, or to an entity in which he is holding substantial interest, then in that context, to the extent of the accumulated reserves, it will be considered as income in the hands of the receiver, and the company has to actually make a TDS on that and give that particular loan. So that is deemed dividend. Then capital gain on conversion under 45(2), we have already talked about it. Capital asset getting converted into stock in trade. So these, apart from this, I mean, I have just put some more deemed incomes with the difference between the amounts which I have put below under 50 CA, 68, 69, 69 AB, etc. These are all the things not dealt with in the tax audit report. If you talk about all these deemed incomes which I just now talked about, these are all the things which the tax auditor has to comment in his tax audit report. The next question. So we have resolved one question: what is meant by deemed income, and give a list. We have just prepared the list. In fact, this itself could be a session on tax audit. This itself could have a multiple slides. I mean, at least 50, 60 slides on this particular one slide. And when I was talking this to in some other session, I said that this is the Vishwarupa slide. In one slide, having multiple faces. So that is the beauty of this particular slide. So let's go answer the next question. Can expenditures become deemed income? A very paradoxical statement that is. Can expenditure become an income? When if you ask this to any science student, he will say that chartered accountants are mad. Now, what I mean by this, and I'm sure all of you know, if the expenditure is not allowed for income tax purpose, then that expenditure is added back to the income. I mean, in the computation of income, we are talking about adding back certain expenditures. So adding back that particular expenditure means that expenditure loses its character of expenditure and becomes an income itself. A very unfortunate thing. But then these are controls which the income tax department has said, if you are not doing the do's and you're doing the don'ts, playing with English that is, so then I will consider that particular expenditure as though it is not a expenditure. So can expenditures become deemed income? Now, let us now play with words. You look at the similarity between the word expenditure and expiry. Now, both of them have etymologically come from the same word. Maybe expiry means a person has expired, so therefore he has to be buried. I mean, I'm just taking one example. In the case of a profit and loss account, the expenditure is what is the benefit in that particular expenditure has got expired. Look at the beauty of this. The benefit in that particular expenditure has expired, and therefore you are debiting it to the burial ground of the company, which is the debit side of profit and loss account. When I know Panaraj is here, Panaraj's brother was my accounts professor, Sirigeri Jain sir. So he was the one who beautifully brought out this concept of saying profit and loss account is the burial ground of the company where you bury all the expired expenditures. So expired expenditures are buried, and the balance, whatever is left out, is your income. And on that income, you are supposed to be paying the taxes. However, if this expenditure, although it is expired, if you are not complying with some of the benefits, I mean, some of the provisions of income tax, it will be treated as though it is not expired. It will be considered as income, and a tax will be levied on that. Let's see what are all those things. Deemed income. So what do we mean by deemed income here? Deemed income category 2, which is accounting expenditure not considered as expenditure for the limited purpose of income tax, which is again referred to in 3CD. Bonus or commission to employees. If normal bonus or commission to the employees, there is no problem. And I am getting the service in return, there is no problem. If I am paying bonus or commission to a owner who has actually invested money to me and he is not working for me, so what I'm actually giving out to him is bonus or commission or salary in lieu of his investment made. Instead of dividends, where it would have gone as a dividend distribution tax or dividend tax, now he is earning it as, so in that, if the company has to pay dividend tax, it has to, first it has to pay corporate tax and then the dividend tax. So to avoid double taxation, he's only taking it as a remuneration for the amount of investments of money and not investment of time. So then that is disallowed under section 36(1)(2). Disallowance of any expenditure where you don't make the TDS. It depends on whether it is to NRIs or non-NRIs. For an NRI, for a non-resident, if you are making any expenditure without making 195, section 195 TDS, it will be disallowed under 40A1 or 40A3 if it is salary. If it is to an Indian resident, then it will be disallowed under 40A1A. But the only difference between 195 disallowances and 40A1A disallowance is, whereas to a non-resident, 100% of the expenditure will be disallowed. For an Indian, only 30% of that expenditure will be deemed to be the income. So then we have 40A4, not very popular, 40A5. If the employer is paying the TDS on behalf of the employee, then that will be disallowed under 40A5. Then 40AB and 40ABA, very popular ones, the interest or remuneration which is paid to the partner or association of person, body of individuals beyond the prescribed limit of 12% per annum, or the remuneration if it is more than 60% or 90% as the 90% and 60% as told there, it will be considered as income. And whatever is added back as income in the hands of the firm, to that extent there is an exemption in the hands of the partner. He need not pay tax again on that particular disallowed income. So that is told there. That becomes a deemed income. Disallowance under 40A3. All of us are very clear that if a particular expenditure on which, I mean, I have paid more than 10,000 rupees per person per day, that is not allowed as an expenditure because it is paid in cash. Very interestingly, I have highlighted this particular 40A3. The tax audit report, that is the form 3CD, itself uses the term deemed income. I mean, otherwise the deemed income is a concept which has been derived out of the textbooks and things like that. But the 3CD, for a change, uses the terminology deemed income. Deemed income here is told only in relation to disallowance under 40A3. What is 40A3A? Now, suppose I have provided for an expenditure in year 1, and in year 1 it gets allowed because it is a provision. and in year 2, I am actually making that payment in cash for more than 10,000 rupees per person per day, then in year 1 it has got allowed. In year 2, it will be disallowed under section 40A bracket 3A. So that also becomes a deemed income. Provision for gratuity disallowed. Any provision for gratuity debited to profit and loss account will be disallowed unless it is paid to an approved gratuity fund or it is paid to the employee who is retiring. Then we have the concept of 40A9, not very popular. Expenditure incurred in relation to exempt income under section 14A. If in my profit and loss account, I credit any income which is not subject to tax, then the debit in relation to that income, that is any expenditure in relation to earning the exempt income, will also not be allowed for income tax purposes. Now, very beautifully, under Schedule 3 of the Companies Act, let us say I have an exempt income, agricultural income, and I have my regular turnover of 100 crores, and I have an agricultural income by selling vegetables, fruits, coconuts, whatever. I have got 1 crore. 1 crore. What 1 crore and my debit to the farmers, to the seeds, to the fertilizers, I have paid 30 lakhs. So the net income, you see the net income, what is to be, if you see 1 crore and 30 lakhs, what if I say that out of my total profits, 1 crore I remove. If I remove only 1 crore, I have to add back this 30 lakhs. In effect, I am deducting only 70 lakhs from my computation of income. So that is how the beauty of section 14A is. Schedule 3 of the Companies Act says, very interestingly, the expenditure in relation to other non-operating income, such as agricultural income, should be shown net of expenditure in the profit and loss account. That means in the profit and loss account itself, I should show my agricultural income as 70 lakhs. It cannot be credited 1 crore and debited 30 lakhs under the Companies Act. Now, disallowance under proviso to section 36(1)(3). Very interestingly, 36(1)(3) says any expenditure, any interest is allowed. Any interest on borrowing for the purpose of the business is allowed. As long as it is meant for business, it is allowed. Now, what is not allowed, if that particular interest is in relation to an asset, until it is put to use, will not be allowed. Rather, it will be allowed to be capitalized. Unless it is put to use. Now, there, let me just draw one very important difference between the provisions in the Act and the provisions in ICDS, which you heard yesterday. What the Income Tax Act says is, I will disallow only those interest which is in relation to an asset which is yet to be put to use. Let me give you a different perspective. That means if I am, let us say, if I have borrowed 100 crores and constructing an apartment for sale. Now, this is not, and the interest on this 100 crores, let us say 10 crores, I am paying 10% interest, 10 crores I pay as interest. Should this be allowed for income tax, yes or no? Now, income tax says all interest on borrowings are allowed, and the proviso says only interest in relation to an asset which is meant for use. Until it is put to use, will not be allowed. Now, when it comes to these flats which are meant for sale, this particular interest is not an interest on asset which is put to use. Rather, it is an interest which is on an asset which is meant for sale. So therefore, under section 36(1)(3), it can be claimed, and the proviso will not apply. However, ICDS says not only with respect to an asset put to use, but an asset which is meant for sale also, it has to be disallowed. Now, this is a very interesting difference between the ICDS and the proviso. And the proviso. Now, what overrides? In fact, the ICDS itself says if there is some provision in the ICDS and something else in the Act overrides. Now, therefore, Act overrides. Now, how as a tax auditor I have to deal with this situation? As a tax auditor, you will see the next questions. Whenever there is a difference of opinion or a dichotomy like this, it becomes good on the part of the tax auditor to make an observation under clause 3 or clause 5 of 3CA or 3CB, as the case may be, and proceed further. the interest inadmissible under Section 23 of MSMEDA Act 2006. So this is very interesting. You see, and there is a deemed income which has to be considered as an income not by virtue of Income Tax Act but by virtue of some other act. What is the MSMEDA Act? MSMEDA Act says that for every micro and small, not to medium, only micro and small enterprise, now under the revised definition from 1st July, I'm not getting into the details of that. So for the micro and small enterprise, the purchaser has to make the payment. Even if the purchaser is a micro and small industry, he has to make a payment to the supplier within the agreed period, which shall not be more than 45 days from the date of acceptance or deemed acceptance. Now, if that payment is not done, then at the time of payment, whatever may be the agreement, he has to make the payment with the interest on the delayed number of days, which shall be at the rate of 3 times the bank rate. 3 times the bank rate. Now, this is told in MSMEDA Act. And MSMEDA Act has told one more thing. And this interest shall not be allowed for income tax purpose. Now, that is what is clause 22 of 3CD, which talks about interest inadmissible, not under Section 23 of the Income Tax Act, under Section 23 of the MSMEDA Act. So this interest, what is debited to my profit and loss account, has to be added back to my income and offered for income tax. Excess payments made to persons, specified persons under 40A2B. That means mostly relatives, directors, interested people and their relatives. So 40A2B. So who are these people under 40A2B? To any of my relatives as defined under Section 2, Subsection 41. We will talk about relatives a bit later on. So any such persons will be disallowed. Excessive payments. Disallowance of any sum referred under 43B. So we know bonus, interest, any statutory payments. If it is not paid until 139 due date, it will not be allowed. So including the employer's contribution to Provident Fund. Employees' contribution we have already seen under 3615. The thin capitalization. Anyway, I would not like to get into the details of that. That is an international taxation issue. All these will comprise of deemed income type 2, where accounting expenditure not considered as an expenditure for income tax purposes and referred to in 3CD. Let's go and answer the. Now you may be wondering, why did I talk about all this as a prelude to audit? Okay, let me now connect taxation and audit. What is the difference between income and deemed income? Now, all of us know income is what we get out of the income and expenditure account, or popularly called as the profit and loss account. The residue of the profit and loss account is actually the income. Now, deemed income is income with additional incomes not considered regularly or for accounting purpose as income, or on account of disallowance of a particular expenditure. So to put it the other way around, income is a derivative. Income is a derivative of the accounting standards, and deemed income is income plus or minus the deemed incomes and expenditures not allowed for income tax purpose that we saw in the last 2 slides. The next question, 3.2. How will the income tax department come to know about the deemed income of an assessee? I'm sure by now you should be aware of it, how I'm going to connect it. How will the income tax department come to know? Just now I told you that all these deemed income type 1 or deemed income type 2 is coming in the 3CD report. So it is, income is made aware by the audited financial statements. Let us be very clear. Income is made aware to the world at large. It becomes a public document if it is a company, to the world at large through the audited financial statements, AFS. And deemed income, at least majority of the deemed income is made aware to the income tax department through the tax audit report that is made available from my end. So that is the importance of deemed income. Next question which comes out is, how will the deemed income be known to the income tax department in case where there is no tax audit? A good question. It's already 1 hour since we started. I just have a sip of water. Another half an hour, both of us can take all of us can take a break, what Dungar Chenji calls as the strategic break, and I call it as the biological break. So we'll talk about the breaks a bit later on. So how will the deemed income be known to the income tax department where there is no tax audit? Now for a moment, we'll look into where there is no tax audit. Tax audit earlier was very simple, 50 lakhs and 1 crore. I mean, in those days it was 25 lakhs, 40 lakhs, and then 40 lakhs. 40 lakhs was there for a very long time, the cutoff. Then came 44 AD and 44 ADA. You know, now we have actually 4 cutoffs, 50 lakhs, 1 crore, 2 crores, and 5 crores. So we have 4 cutoffs for the tax audit which we are going to do for financial year 1920. 5 crores, what was announced in the budget 20, that is the Finance Act 2020, has made it immediately applicable. So we have 4 levels of cutoff for the for doing the tax audit. But let me make it simpler and easier for you. One is 50 lakhs, the other one is very clear. 1, 2, and 5. 50 lakhs is very easy. It is under for the professionals under 44 ADA. Under 44 ADA. For a specified professional, it is considered to be 50 lakhs is the cutoff. Now, what does the rule say? If you are showing anything more than 50% in the hands of a specified professional, you will not be subject to tax audit. Otherwise, you subject him to tax audit. So you look at the beauty of how the income tax department has actually worked out. I don't want to know his deemed income. I don't want to know his deemed income. I don't want to know the deemed income of the assessee from the tax auditor if such a specified professional is offering me more than 50% of his total receipt as income to me. That is what I call it as the threshold of materiality for the income tax department. Now, all these numbers, 4 numbers which I told you, was considered to be the threshold of materiality for income tax department to determine whether it should be subject to tax audit or not. And then they said they have kept control. Once I determine the threshold of materiality, I will also fix him a minimum percentage of profit. If he shows that much, it is fine. If he shows anything below, subject him to tax audit, where again I will come to know about all his deemed income type 1 and type 2. And regular income I will come to know through his financial statements. Now, I was talking about the other 3. For the businessman, there is a cutoff of 1 crore, 2 crores, and 5 crores. Let's make things simpler for 5 crores first. We'll remove 5 crores. 5 crores is not applicable to 95% of us. I mean, I'm just putting it in a very jocular manner. What does the rule of 5 crores says? 5 crores, even if it is a company, even if it is a LLP, even if it is a partnership firm, if less than 5% of your total receipts is in cash, that means 95% of your receipts and 95% of your expenditure is other than cash. That means it is in the form of account paid check, account paid draft, or online transaction. Then also you will not be subject to tax audit. You will not be subject to tax audit. So this is also removed. So such a person, should he show the minimum presumptive tax? The answer is no, because what has happened is, if such a person is actually showing up to 95%, the department has a trail for everything and maybe can do it without a tax auditor, is what they feel. Now, then we are left out with this 1 crore and 2 crores, which you already know. 1 crore, 2 crores is for a specified assessee. If you are a specified assessee, then and you are showing a presumptive taxation of 8% or 6%. 6% means for other than cash, 6%. 8% is if it is in cash or otherwise. So then it is 8%. So in such a context, it will be, if you're a specified assessee again has been told as individual, HUF, and partnership firm. Partnership firm not being an LLP. For an LLP and a company, they are not considered as specified assessees. For them, the ceiling is 1 crore only. For a company and an LLP, it is 1 crore. Exception being that 5 crore case where they're actually coming under 95%, both expenditure and income of 95%. So how will the deemed income be known to the income tax department in case where there is a known tax audit? The answer is very simple. If it is coming under this 1 crore, for them 1 crore is a threshold, 5 crores is a threshold. If you're anyway showing me more than the specified profits in the presumptive cases, I don't need to know their income. So that is the answer for that. Next, what if the tax auditor does not report properly in the tax audit report. Now, having understood the importance of tax audit, because all the deemed incomes will be known to the department only through our report, and as Mr. Naresh Gelli was talking in his inaugural address, that the department is taking up only 2% of the cases for scrutiny. 98% they are believing on the tax auditor. They are believing on the tax auditor. I mean, I'm talking of material cases. So they are believing on the tax auditor. So therefore, our job should be properly done. If we don't do the job properly, maybe it is not a bad name for the chartered accountant, but for the profession at large. So what if the tax auditor does not report? There are control mechanisms. As Mr. Naresh Gilli went on to say in his inaugural address that, and also Mr. Dungarchan wanted me to talk on this, Taxation, Audits, Quality Review Board. In Bangalore, when I have been associated with the Financial Reporting Review Board for the last 15 years. What does this Financial Reporting Review Board do? The various audited financial statements are picked up, either based on complaints from the regulator or based on some infighting within the board of directors or infamous news coming into the newspapers, or it could be picked up on a sample. It can be picked up by the sample, random that is. So those financial reports are picked up by the Financial Reporting Review Board and sent to technical reviewers, individual technical reviewers who have got 10 or 15 years of professional practice. So they will go through and find out if there are any mistakes that could be found out apparently from the financial statements. It could be in relation to audit, or it could be in relation to compliance with accounting standards, or it could be in compliance with auditing standards or code of ethics, or it could also be in relation to Companies Act, Schedule 3. Now, those financial statement which is observed, I mean, the mistakes, if at all pointed out by the technical reviewer, will thereafter be sent to a group called the Financial Reporting Review Group, consisting of 4 chartered accountants who will be sitting in judgment on whatever is prepared by the, I would call him as the institute's advocate. The institute's advocate is a technical reviewer. He will send his report. The technical reviewer's report is given to the Financial Reporting Review Group members, who are 4 members. They will sit and debate whether what he said, what the mistakes that he has pointed out, whether there are correct mistakes or can be, I mean, they're not mistakes in the opinion of the larger group. So this group prepares a report and then sends it to the Financial Reporting Review Board, which again does a sifting of the observation made by the group. And finally, if they decide that whatever the group has told is right, if it is what the group has told, also they can override if it is not correct. Let us presume that they have come to a conclusion that the mistakes found out by the reviewer and the group is correct. The mistakes are segregated into 2 types. It could be mistakes which are just technical in nature, Okay, the technical in nature could be Schedule 3, the line getting transposed. I mean, instead of giving current asset and maybe non-current asset and non-current asset, they have intertransposed, or a particular item within that heading has been intertransposed. It could only be a technical nature, or it could be a serious nature which could impact or impair the very true and fairness of the financial statement. In that context, so they segregate the information into 2, and with respect to item number 1, which are technical in nature, a letter goes from the Financial Reporting Review Board telling that, hey, look, you have made a mistake, please correct it for next time. I mean, I'm warning you that this is not a good thing, what you have not complied with technical requirement, but I'm only telling you, I'm handholding you, or I'm telling you that you please correct it from the next time. It could also be an item number 2, where it could be serious. If it is a serious matter, the matter would be referred from the Financial Reporting Board directly to the disciplinary committee, who can then send a show cause notice to the chartered accountant saying that there is a mistake in the financial statement, show cause why we should not take disciplinary action. So this is how the Financial Reporting Review Board has actually functioned for the last 12 years or 12 or more years, as I know. Now let's talk about the Taxation, Audits, Quality Review Board, which is set up in similar lines as the Financial Reporting Review Board. This was set up in 2018. Now, what is this objective of this board? To review any report certified by the chartered accountants It could be 3CD report, or it could be 9C report under the GST law. So with respect to income tax, it could be not only any report, it could be any certificate. It could be a 15CB certificate that I am issuing. So it could be any certificate or report issued under the Income Tax Act or under any of the indirect tax laws, including the GST law, to determine what? Compliance with reporting requirements under the respective acts and the ICAI guidance note issued. So the board, again, I'm sure it will be working under the concept of the technical reviewer, the group, and then the board. And finally, it will again go hand with the same notion of technical mistake or whether it is a serious mistake. One of the happy observation that I was reading, in fact, 7th of August, there is a good program from this particular board where they have already observed common mistakes identified in Form 3CD. I think there is a program from this particular TAQRB where they are going to tell what are the common mistakes that they have already identified in the 3CD reports. It could be a good observation. And as an initial cursor to that particular program, they said, while this particular board is set up and we have reviewed a lot of 3CDs, and we are happy that most of them are complying with the requirement. However, there are still non-compliances. Those are the non-compliances. We want to educate the members so that others' bad experience can become your avoidable bad experience. So that is what is a program. So what I was trying to address is what if the tax auditor does not report properly in the tax audit report? You must understand we have multiple control mechanisms. The auditor should be understood. Auditor is not the last auditor. I myself am be subject to peer review. Now there is a lottery, or it could be based on a complaint from the income tax department, or it could be some infamous report. If the financial report is taken up, maybe the taxation, and there they find out a lot of mistakes. Maybe they can pick up the tax audit reports also of such a company and review that also separately. So there could be various control mechanisms to find out if there are mistakes done by the chartered accountant. He is not the ultimate. Okay. Next point, what we call it as 271J. Now this one, the about taxation audit quality review board is from our institute, maybe from our own regulator. The second one is not from our regulator. It is by virtue of the department levying me a penalty of 10,000 rupees. It is not only on the accountant. In fact, income tax department considers me as an accountant. I mean, I don't have a problem, but an accountant is doing the tax audit. I mean, if you see the section 288, which defines who can do the audit, section 44AB says the audit can be done by an accountant as defined under 288. They do not want to give the position of an auditor there. Anyway, that be it as it may. Merchant banker or registered valuer for furnishing incorrect information in each report or each certificate, there could be a levy of 10,000 rupees. Then if somebody feels that ante kada, I mean, if talking in terms of Telugu, if I am say ante kada, 10,000 rupees is the only penalty that I have to pay. Let me tell you, 10,000 rupees first of all is for each mistake or for each report. I mean, I would like to say that it is for each mistake. And then it will not stop there. It may also be such cases on which 271J is taken up can definitely be referred to the Taxation Audit Quality Review Board, and then it can lead to the disciplinary action by ICAI. So here I have given negligence in reporting simple things like 40A3 or 40A1A violations is considered as a professional negligence, and it could probably lead to the removal of the name of the member from the register itself. I mean, as a student, when I was reading this, when I was reading the Code of Ethics as a student, I was thinking, what happens if the member's name is removed for 3 months, 2 months, 1 month, or 1 day? Now I realize as I progress in my career that I don't work for money anymore. I work for retaining the good name that I've earned. So even if my name is removed even for a 1 day or by virtue of a disciplinary action, I would consider that as a big black mark in my career. So I would definitely not ensure, I'm sure none of you would like to have that black mark on your name. And look at the amount of maybe shame that you are having in front of your juniors, in front of your clients, and you can't apply for some of the C&AG audits if matters are there. You'll have to mention in every C&AG audit or bank audit what are the disciplinary cases pending against your name, things like that. So please avoid getting a bad name to yourself or to the profession at large. Now I come to one very interesting observation made by I got it as a forward in one of the WhatsApp from Hyderabad group, and I felt that this is a very good observation. The Honorable Kerala High Court had made a very interesting observation on income tax laws in Kannandevan Hills Plantation Company Private Limited versus ACIT Kerala High Court. The observation is like this. The Income Tax Act is one enactment that can shatter anybody's linguistic confidence or competence. Each provision, inevitably though, runs into pages, superordinate, subordinate, and sub-subordinate clauses, piling up in synthetic curlicues. With annual additions, the provisions lose coherence and defy comprehension. Neither a lawyer nor a judge can claim with comfort, if not with confidence, that he could comprehend the provisions at least on a reading. The taxpayer is surely lost in a maze of meandering phrases. It is therefore time for the revenue to host on their website a plain English version of the enactment, only a suggestion, however. One may say that the income tax, when we say notwithstanding anything, sometimes jocularly we say not understanding anything contained in the act. We keep on telling this. It runs into provisions, sub-provisions, explanations, explanation 1, 2, and things like that. So finally, the court itself has opined that the act has to be simplified. The act has to run into, it looks like Latin, just like what I've written there. Ignorantia juris non excusat. So what does this mean? This is a Latin terminology, which in English, when it is transferred, it could become ignorance of law is of no excuse. Ignorance of law is of no excuse. Now, why did I touch about this? Is no doubt income tax is tough. Chartered accountants cannot take that as an excuse. Can that be an excuse? The answer is no. If you look at this, I was just reading, neither a lawyer nor a judge can claim with comfort. They have not used the word chartered accountant. Maybe they feel that a chartered accountant can probably read the Income Tax Act because he has passed the toughest CA examination. So finally, I wanted to say, you cannot, although the Income Tax Act may look like Latin to the client, it has to be understood by the chartered accountant and complied in the true sense of the term. So while he is also doing his audit and code of ethics, etc., there are certain control mechanisms which have been kept. One of them is UDIN. I'm sure all of you know. I thought that I'll have to just touch upon this. UDIN is mandatory, and please generate UDIN before signing. Although there is a 15 days window, take that as an exception and not as a rule, because just in case you forget, then you will have to face the disciplinary action. That's what the institute says. UDIN is required for internal audit reports, for certificates, including the ROC form certificates, including the forms which get generated on the system for which you may not take a printout. Now, please understand that you'll have to take. Now, in this situation of work from home, maybe I don't have my DSC or whatever, you still have to do what the right thing, rather than there is no exceptions provided even for the current situation. The types of UDIN generated, I'm sure all of us know by now, but for tax audit, 3 key figures which have to be used for generating a UDIN is the total turnover as per 3CD, net profit to turnover as per 3CD, and return down value of the fixed assets as per 3CD. It is not the return down value as per the financial statements. It is return down value of the fixed asset as per 3CD. Because if you're a company, you're following the company's rate for financial statements and section 32, whatever appendix 1 rates for income tax depreciation. So please use the return on value of fixed assets as the key number or the key figure for generating the UDIN number. FAQs on UDIN. UDIN is required for all management services. 1 UDIN per assignment signature affixed at a time. Separate UDINs for standalone and for consolidated financial statements. UDIN to be mentioned on audit reports. If I'm doing the company audit report, I have to attach it to the audit report and not to the financial statements. I don't have to take one for the audit report and one for the financial statements. Even if I don't mention the financial statement, I don't mention the UDIN in the financial statement, it is okay. If you mention it, it is okay, doesn't matter. But you should mention in the audit report. Similarly, 3CA and 3CD, you generate only 1 UDIN, you don't generate two UDINs. UDIN required by component and branch auditor also. UDIN mandatory for audit, attest and assurance function. So what is all this? We'll see a bit later on. Filing online using DSC. So that's the point to be noted. And whether, this is a very interesting thing that I thought I should tell in the session, whether I can certify ITR of an individual, which is required for the bank loan purpose. A lot of clients come to us and say, the bank, some of the car loan purpose, say that this is the ITR which has been filed with the income tax department. If I put a seal and signature and say, this is the one which has been filed with the income tax department, that will not serve the purpose. The institute has told in the FAQs when generating the UDIN that members are not authorized to certify ITR as true copy, but they have been authorized to give an opinion or a certificate or a report about the ITR based on its source. So this can be a document, but you will have to give his income is so and so based on his income tax return. This is the income. You can base it on that, and you should not put a seal and signature on the income tax return itself. So that is a point to be noted. UDIN is required while doing so. Of course, when you are giving such a certificate also, UDIN is required. One very interesting thing which came out a couple of months back was you can generate bulk UDINs. That means if you are generating lot of certificates, in our office, we are filing lot of MCA forms for which UDINs, for which certificates have to be issued, CA certificates have to be issued. If I'm issuing 10, 20 certificates in a day, I can feed in all those key numbers and put it in an Excel and upload it. I will get 10 or 20 UDINs automatically from the, so automatic bulk generation of UDINs is possible from 17th June. They have given a procedure. Question number 5. What are the qualifications and disqualifications for a person to be appointed as tax auditor? One very interesting thing is the qualifications and disqualifications, interestingly, come out of the Institute Council guidelines. It could come on account of Code of Ethics, or it could come on account of Income Tax Act. And Income Tax Act, very interestingly, relies on Companies Act. So we can have the entire qualifications. Qualification definitely comes from the section 288, which says only a chartered accountant can do. Only a chartered accountant can do. It cannot be done by a cost accountant, cannot be done by a company secretary. And we should ensure that they don't come into it. That is possible if we do a good job. So qualification is only one, that the person who is doing it should be a chartered accountant, a qualified chartered accountant. Disqualifications they have told. So disqualification for the tax auditor coming out of ICAI guidelines is CA in part-time practice cannot be a tax auditor. Internal auditor cannot be a tax auditor because there is a self-review threat. Similarly, an internal auditor cannot take up the GST audit also. Just a point of note. Then there are various threats that are told in the Code of Ethics which we should know. Because you should understand one thing, that this Code of Ethics is a principle. As I told you already, it lays down the principle based on which the auditor should take up the job or should not take up the job. If he feels that there are certain threats, he will have to see whether there are enough safeguards. And if there are safeguards, he can, using those safeguards, can go forward. So let's see what are the various threats. There could be a self-interest threat, wherein he has a financial or other interest which may inappropriately influence the behavior, which in the Income Tax Act, read with Companies Act, says, if I have one share in a company, I cannot be an auditor. Or if my relative owns more than 1 lakh face value of shares, I cannot be the auditor of such an entity. So the self-interest in the Companies Act has been expressed in terms of a rule. Here they have told in terms of principle. So that makes us, let's understand what is the difference between a principle and a rule. Now we always say principle is qualitative statement. Rule is a number. Rule is a number. So you understand what I am saying. So self-review threat, not evaluating previous judgments made or not pointing out own mistakes. That's what I talked about when I am doing the computation of total income and I am only doing the audit. I have the self-review threat. So please don't do that. Advocacy threat. Promote a client to such an extent that objectivity is compromised. Maybe I have got a loan for the client. That's why I say when you are doing a financial service to the client, you should not be the auditor of that particular company, because when you are promoting that client with the banker, then you have an interest in him. So therefore you should not be his auditor. Auditor promotes client's opinion. Could be that you are now appearing before the court of law to fight out this particular case, becoming his advocate. So therefore, there is a threat. Familiarity threat. Auditor knows the client too well and vice versa. That is why the control is the rotation. And as and when I keep on growing my relationship with the client, there is a, I have seen that last year, therefore there is no need to see now. I know how he deals with that. He does a good job always. So that could be a deterrent for me. So therefore, the rotation. So being too sympathetic to the client. Intimidation threat. Now this is a very beautiful term. What is this? Undue influence over the auditor. Maybe if I have given some money, look at this. Self-interest threat is where I have invested the money in the share capital of the company, or he has given a loan to me. There is an intimidation threat when I have given a loan to him or he has given a loan to me. Or it could be a replacement or disagreements. When intimidation threat could also be talked about, if let us say a small firm is appointed as an auditor of Reliance Industries Limited, when he will consider Mukesh Ambani as a god. Sir, whatever you say, I am prepared to do. Or an employee coming in the garb of a auditor is also not correct. So therefore, intimidation threat, a large client and a small audit firm is also not considered to be a good scenario. There is a threat called the intimidation threats. So threats cannot be eliminated. They should be at acceptable levels. So revision in definition of accountant. So let's see the we talked about the council, we talked about the code of ethics. Now we will talk about very specific disqualifications and qualifications coming out of the Income Tax Act. Section 288. Section 288 of the Income Tax Act tells what is the qualification. Qualification is chartered accountant holding a valid certificate of practice. What is the disqualification? Now, income tax says the assessees, the tax audit assessees can be of two types. Either he is a company or he is a non-company. If he is a company, if whatever disqualification told for the company's statutory auditor, the same disqualifications apply for the tax auditor also. Disqualifications in the Companies Act are told under section 141 subsection 3. So under 141 subsection 3, whatever disqualifications apply for a statutory auditor, the same disqualifications apply to the tax auditor also. And a word to be noted is not only for doing the tax audit, even for issuing 15 CB certificates or for any reports under the Income Tax Act, such a person is disqualified. And for non-corporates, they have not referred to 141. They have brought in the same 141 provisions inside the Income Tax Act to say more or less the same disqualifications apply to the non-corporates. That is an individual client or a partnership client or a LLP client. So we will see what they are. Further, if he is impounded, for imprisoned or whatever, that is another question. So what are the disqualifications under 141.3? Body corporate. If the auditor is the officer or employee of the company, he cannot be. Partner. If I am in partner with or employee of an officer or an employee of a company, I cannot be. Relative of a director. If the company has a director and I am his relative, I cannot be the auditor of that particular company. Not only the director, even the key managerial personnel. The key managerial personnel could be the CEO, the CFO, or the company secretary. So these people are all considered as the key managerial personnel. If I am related to them, I cannot be the auditor of that particular. I cannot be auditor of that company for statutory audit purpose. I cannot be the tax auditor for the purpose of tax audit. So convicted by court, rendering prohibited services under 144. So rendering prohibited services, we all know: accounting, internal audit, financial information system, actuarial services, investment advisory, investment banking, financial services, management services. Management services has certain exclusion. That is, tax advice and tax representation are not considered to be advisory. However, tax advice now under the code of ethics could become a question mark. So then there is another issue: auditor by himself or his relative or partner or the firm holds a security, one share in the company or interest in the company, holding company, associate company, subsidiary company, and fellow subsidiary. Then even if I am holding one share or my relative is holding more than 1 lakh face value of that particular share, I cannot be the auditor of that. I cannot be the auditor. I cannot be the tax auditor of such a company. If I am indebted to the company holding associate subsidiary, fellow subsidiary of more than 5 lakhs, if I have given guarantee or security with respect to a third person to the company, holding company, associate company, subsidiary and fellow subsidiary of more than 1 lakh, I cannot be the tax auditor of that company. Has business relationship for commercial purpose. If I have a business relationship with the client, I cannot be the auditor of that particular client. However, there have been given certain exceptions. Transactions which are in the ordinary course of the company's business at arm's length price. That means if I am having BSNL services, I mean, I'm using BSNL phone, can I be the auditor of BSNL? If BSNL is giving it to me like it is giving to everybody else and charging me the same rate as being charged to everybody else, that can be considered as an exception. Otherwise, any business relationship with the client will be a disqualification for the auditor. One very interesting thing that I have to notice, who is a relative? What is the definition of relative for the purpose of? Let me just give you a situation where my grandfather is a director in a particular company. Can I do the audit of such a company? There is a very important thing. The definition of relative is defined in different contexts differently. Now, if you look into the Companies Act, my grandfather is not a relative. And I very oftenly keep telling this, the definition of relative for Companies Act is told in section 2, subsection 77 of the Companies Act. In fact, in 1956 Act, it was a schedule 1A of the Companies Act, which had given a big list. Now they have pruned down to say the Companies Act definition of relatives is very small. Accounting Standard 18, I always talk about Accounting Standard 18. The relative is very simple. Aju baju, आगे पीछे, just ऊपर, just नीचे. Aju baju is husband and wife. आगे पीछे is brother and sister. Just ऊपर and just नीचे is father, mother is just ऊपर. Son and daughter is just नीचे. So that is the definition, the simplistic. That means very less number of relatives I have under AS 18. If you go to the Companies Act, more or less the same definition, except two more people added. One is the son's wife. Who is the son's wife? Daughter-in-law. Daughter in which law? When I keep telling this, daughter in company law. Similarly, daughter's husband is a son-in-law. So son in company law. So these two people get added there. So if you look at this, if my grandfather is a director in the company, or to put it the other way around, if my grandfather is holding shares in Infosys worth more than 1 lakh face value, I will still not be considered as bad for doing the statutory audits of such a company, of such a particular company, as per Companies Act. Now let's go to Income Tax Act. Now, Income Tax Act, I still have a question. Although they said that you have to follow the disqualifications as told under 141, and for 141, should I look into the definition of relative under the Income Tax Act, or should I look into the Companies Act? There remains a question mark. Because for the purpose of Companies Act, for the purpose of Income Tax Act, and for the specific purpose of Section 288, they have told who the relatives are. Who the relatives are. They have used the relative definition from 5627. 5627 defines relatives. Income Tax Act, there are definition of relatives in 3 places. One is Section 2, subsection 41, Aju Baju, Aage Piche, Uppar Niche. You see the difference between AS 18 and 241. 241, AS 18 restricts only to first floor and ground floor. I mean, the first, just Uppar, just Niche. Okay. Whereas income tax relative for the purpose of Section 40A2B, when I'm talking Section 40A2B, any excessive payments made to relatives, or let me talk anywhere the word relative is used other than for these 2 purposes, I have to use the definition of relative as told in Section 2, subsection 41. There they say Aju Baju, Aage Piche, Uppar Niche. That means linearly ascendant, linearly descendant. That means my grandfather is a relative for the purpose of 40A2B. Now, for the purpose of Accounting Standard 18, my grandfather is not a relative. Whereas for the purpose of Companies Act, also my grandfather is not a relative. Now, I will come to the gifts for 56 to 10. If I have to take gifts from my relatives, from whom I can take gifts is given here. So who does that person is? I can take it from my spouse. I can take it from my brother or sister of the spouse, my wife's brother or wife's sister. brother or sister of either of the parents. That means brother or sister of my parents, my mother or my brother, my mother or my father and their brothers. Lineally ascendant or descendant, my children, my grandchildren. Lineally ascendant, descendant of the spouse and spouse of B2F. Very clear. Now, if you come to section 288, it is slightly different from 5627, which says spouse, brother or sister of the spouse, any lineally ascendant or descendant, any lineally ascendant descendant of the spouse, spouse of B2A, and the G is any lineal descendant of the brother or sister of either the individual or spouse of the individual. I see Dungarchan coming online. I will stop here. That's what you are trying to say?
No, you can complete the slide and then we will take.
Yeah, okay. I'll just complete this. It's nice to see Dungarchan's face. I want to put a spotlight on you. I just want to make one succinct difference between 5627, very important, where I am taking a gift. Can I take a gift from my mother's brother? My mother's brother. My, what do you call them, Jainji? Mama. Okay. Can I take gift from my Krishna Mama? I mean, I am talking Krishna, I am Abhimanyu. So can I take the gift from Krishna Mama? Answer is yes. Can I give a gift to my Krishna Mama?
No.
Can I give a gift to my Krishna Mama? I am a relative to him, but he is not a relative to me under 5627. That is how you have to see. Now use the same analogy here. Can I do an audit? Can I do an audit in which Krishna Mama is a director? You look at this. If you look at this, it says it doesn't debar me. However, if Krishna Mama is actually doing an audit, he is an auditor and I am a director in a company, he cannot do an audit in which I am a director. Look at the ethos, how beautifully the Indian ethos are enshrined in our act. 5627. Normally, the mama has to give gift to the mama has to give the gift to the nephew, right? The nephew normally does not give the gift to the mama. So that is how it is built up here. Similarly, if you see brother or sister of either of the parents in 5627 is given in green, the green is 288 here. Any lineally descendant of the brother or sister of either the individual or of the spouse of the individual. So as far as I am concerned, I am his sister's son. He cannot do the audit of me. You see, maybe my mama is very benevolent to me. So therefore, he cannot be auditing a firm in which his Bhatija is actually his director or related, director in that sense. So that is how you'll have to get into this. I will also finish off the disqualifications for non-corporates. Assessee himself, partner in the firm, in case of a trust, in case the assessee is a trust, the founder of the trust cannot be the auditor. Person who has contributed more than 50,000 rupees. Now look at this. If I am doing an audit of a trust, and normally trust audit, I know how it happens. It generally goes with the, your Guruji's thing. He says, okay, you do the audit of this particular trust. And you have actually been contributing to the trust also. Every year I'm contributing 10,000 rupees. And Guruji says you do the audit because you know everything about this, you do the audit. Now the moment you have contributed 50 rupees to the trust up to the end of the relevant financial year, not in that particular financial year. Last 6 years you have contributed 10,000, 10,000, 10,000, and in this year it has cost 50,000 rupees. You cannot be the auditor of that trust. Again, the reason being, you benevolent to such a trust, you will be losing your independence. So relative of a person specified in 23123, partner or employer of an officer. Then similar things like holds a security or interest, is indebted to the assessee, gives guarantee or security with respect to the third person, has business relationship, even for non-corporates, just like a corporate, all the disqualifications are appearing. I think from here I will take up post the strategic break.
Yeah, we will resume at 11:45.
Sure. Yeah.
I'll just take the screen and put that on the screen so that people will know.
Sure.
Who is joining in between shouldn't know that, see that suddenly the session has stopped.
Yes.
Abhi, maybe at 11:44 you can give the announcements so that
Sure,
we'll
sure.
save that 1 minute
Sure.
and give to the speaker in the end actually.
Yes. Even I thought we would give the listeners a little break.
Correct.
It's not a good
No, no,
break.
we all need it. The moment we are glued to the screen for such a long time. But technology has its advantages and disadvantages too. Concentration becomes difficult when you are, sitting before a system or the mobile.
Right.
In fact, that's why they say if you want to register things in your mind, you should always read from a book. It will stay in your mind. The
Right.
moment you read it from a computer or mobile, is only there for a temporary period actually.
Absolutely.
Gururaj, we are missing the physical meeting comfort.
Sure. I know. Definitely.
The Brahmaya Hall, the Chennai, Madurai.
I'm definitely missing the visit to your temple, Madurai temple.
No, God willing, it will come fast, maybe 2-3 months if things stabilize.
I'm sure. So how's the going?
Yeah, the numbers are on the increase everywhere, sir. Madurai is also number-wise, things
Okay.
are not fair, actually.
But I think all our members are safe. You must be knowing.
No, sir. There have been some quite unfortunate incidents.
I see.
One of our branch chairman, Rajamundri branch chairman, expired.
Oh,
His
really?
son also expired the same day, actually.
Oh, so
And there are
sad.
some chartered accountants who are no longer with us due to the
So
COVID.
sad. Oh,
So the initial days we were hearing about whom we were not. Now, 1.5 months, we are hearing
Oh.
people whom we know and we have moved with them.
very sad, no? It has
So
come
that's
very.
why we tell people to be more safe. Don't go outside unless it is really required. Do not venture into things which may get into this COVID thing.
I know. I think so. We have to be. I think maybe keeping like this on a Sunday also. Otherwise, people are forced to go out. You are actually making forced to sit now.
No, in Madurai, like Sunday is full curfew. You are not supposed to go out at all.
Okay. It was so in Bangalore, but now we are allowed to go. I think Abhishek, Chennai is very bad, no?
No, Chennai actually it was in a bad way, sir. But they had a 15-day very, very strict lockdown. Since then, situation has improved. But
Now you are under lockdown, is it? You are under lockdown, huh?
Sunday, less like
Sundays,
how
Tamil
Chairman
Nadu,
said, Sunday Tamil Nadu is full lockdown.
Only Sundays, okay.
Yeah, no, we are in a lockdown, but not as strict a lockdown. That is a
Okay.
situation.
Abhi, can you go ahead with the announcements?
Yeah. But the thing is, sir,
Okay. We are live, is it?
We are live. We are live. We cannot cut it in between.
Okay, I'll just share a few announcements. So request members to please register for the following programs, very important ones. 6th of August, we are continuing our tax audit seminar that we have planned. This one is going to be a 2-day session, a refresher course on tax audit and technology. all know today, tax audit is completely done through the system. Whether you're Excel or you're using a Java, you're going to be uploading it. And there are certain implications, as you may be aware. Our tax audit report is now done 1 month before the return filing date. Normally, contemporaneously, we used to do it, but there are some repercussions. When your tax audit report is going to be there, maybe it is going to get pre-filled XML of the client. All of these challenges are there, and how to prepare your documentation, how to prepare your accounts from Tally, tax audit using technological tools. This is going to be covered on 6th and 7th of August at 6 p.m. CA Vijay Agarwal from Delhi on 6th of August, and we have CA Saran Kumar from Hyderabad on 7th of August. In fact, I must also say GST has also been, we have got a very phenomenal response, just like the tax audit programs that we are conducting today and tomorrow also we have a session. Like that, our GST audits also, we have got a very good response. So Chairman and I have specifically been discussing how to have more GST programs on 10th of August, at 5 p.m. On 10th and 11th rather, 10th and 11th of August, we have a 2-day refresher course on GST annual return, GSTR 9 and GSTR 9C. GSTR 9 and GSTR 9C, you know the dates are coming soon. So GSTR 9 is going to be done by CA Ganesh Prabhu, and GSTR 9C is going to be covered by CA Shankar Narayanan. This is on 10th and 11th of August. You should please register for that. On 22nd of August, we have a virtual CP meeting on how to draft replies and pleadings to various notices under the Income Tax Act. This is a practical approach where we have got CA Kapil Goel from Delhi, very, very respected and reputed speaker. He will be taking us through on how to draft replies and pleadings under various notices. This is also important because normally we are used to going and arguing the case face to face before the assessing officer, having a cup of tea, having a samosa with him, and then getting a favorable order, or just discussing the case and maybe understanding it better. Now everything is done through e-assessment mode only. So therefore, all that efforts that you are putting, coming well groomed, looking straight, looking into the eye of the officer, you would have been told sit up straight, come wearing a suit, wear a tie. All of that is gone. Everything is going to be represented by what submissions you are giving. So therefore, more important than ever, the quality of your submissions, how to draft, all of these will play a very, very important role. It is an art. So that is why we felt it's better. We will also arrange one more program on drafting of appeals, etc. Chairman and I are in discussions, and we will upload that as well. So that is on 22nd of August. So with this, I'm handing over the session back to the able hand of our wonderful speaker, Gururaj.
Gururaj, you can share your screen before you proceed, sir.
So welcome back. I think we stopped at this and we start from there. Ceilings, all of us are aware that I cannot do more than 60 tax audits per partner in a firm. Or if he's a proprietor, only 60 audits he can do. This is based, however, this 60 number does not include those presumptive cases where I do the audits because they have not met up with that 8%, 6% or 50% as the case may be. Now, under the Companies Act, I have ceilings, which I will not talk about at this stage. I will just get into the next. The accountant. There are certain issues arising out of the qualification, disqualification. Can a CA accept audit of a client to whom he has given loan of rupees 5 lakhs? Now, if you see, if I have taken a loan, definitely I cannot be the auditor of such a company. But if it is an individual or a firm or a company to whom I have given a loan of 5 lakhs, can I be an auditor of such a company? Now, there, our institute's guidelines say that you have a case of self-interest threat. If you have given some money, any monetary connection between you and your client is an avoidable situation. However, if it is of such an immaterial thing to both of you, then you can decide on the situation. That is how they have left it. But it could lead to, under the Companies Act also, having a business relationship, especially if, this, if you have given a 5 lakh rupees, well, it amounts to having a business relationship, and I would say it is always avoidable. What if the loan is interest-free? Definitely, if there is an interest levied by your client, and let me put it like this, and if your client happens to be Canara Bank, okay, and I have, and that is considered as having a business relationship with the bank, and if Canara Bank is giving me interest like it is giving to any other entity, then there is no problem. Whereas if I have taken a loan of 5 lakhs and more from Canara Bank, definitely the disqualification kicks in. But keeping the money with Canara Bank, 5 lakh rupees, will not debar me from being the auditor of Canara Bank. Now then this is one very interesting thing which comes out from the Code of Ethics. Whether overdue fees might be equivalent to a loan to the client. Very interestingly, the Code of Ethics says that the fee which is due for more than 1 year, the fee which is due for more than 1 year, at the time of the audit of the next year, also if the earlier year audit fee is not paid, it could become an equivalent of loan given to the client. And whatever precautions you have to take for loan given to the client must be exercised here. So the best thing is to collect it by telling the client about this particular provisions. Now, you are appointed as tax auditor for assessment year 2021, the current assessment year, whether it is necessary to communicate with the previous tax auditor or statutory auditors. Very important that all the auditors, whatever type of audits they are doing, it is important for them to communicate with the previous auditor of that particular type. That means if I am appointed as a tax auditor, I don't have to communicate with every auditor. I have to communicate with the tax auditor. I don't have to communicate with the statutory auditor. Similarly, if I'm appointed as a statutory auditor, I have to communicate with the previous statutory auditor. Now, it may look as though it is very simple and everybody has to comply, but most of the disciplinary committee proceedings which come before the council or before the DC proceedings is on account of not having proper communication with the previous auditor. In fact, the Code of Ethics goes on to say, if I am appointed as an internal auditor, I am supposed to have a communication, make a communication, prior communication with the previous internal auditor. Even if he does not respond, it is okay. I have to give him sufficient time to say, and I should have a proof that it has reached him. And today, in view of the COVID, our institute has told even an email communication with the proof that it has reached him is sufficient. What should be the address to which it goes? The address that is available with the client or with the institute. In the institute's record, whatever is the email ID, that is the ID to which the communication has to go. In fact, our institute says not only for audits, even for certificates, let us say 15 CB certificate, it would be a good practice. There they have not mandated it. It is a good practice if you communicate with the previous chartered accountant who has been issuing the certificates, because quite possibly the previous auditor may tell you that he has done something because of which I have given up, and that probably is a hint to you also not to take up or to mend that particular client, to mend his particular wrong practices. What if the assessee was not subject to tax audit in the previous year, that is in assessment year 1920, but was subject to tax audit a year before in 1890? The answer here is the Code of Ethics says not the tax auditor of the previous year, but whoever was the auditor in any of the earlier previous year, the previous tax auditor of the client, not necessarily for that year, for any years. You'll have to go back in history and find out which was the last year on which he was subject to tax audit, and you have to get a, you have to communicate with him. Normally, we talk about getting an NOC from the auditor. It is not to be considered as NOC. It is communication with the previous auditor. Point number 8, you have communicated with the previous tax auditor, but he has objected that you cannot accept the tax audit as his professional fee for consultancy is outstanding. Can you accept the audit? Now, what our Code of Ethics says is, if the auditor has not been paid his statutory audit fee, then he can put an objection and you should not take such an audit till that fee is paid to him. However, if it is on account of any other fee, in this context, it is a professional fee for consultancy which is outstanding, which is not in relation to the audit, then that fee, notwithstanding that fee not being paid, you can still go ahead. However, our Code of Ethics also says it is in the professional interest. I mean, it may not be out of mandate, but in your own interest that you can get your brother's fee gotten paid by the client. Next, in case of non-audit entities, non-corporate entities, corporate entities very structured. We have got Schedule 3, we have got the accounting standards applicable to them directly from the company's accounting standard rules or Ind AS, as the case may be. In the case of non-corporate entities subject to tax audit, are accounting standards applicable? What is the answer? are accounting standards applicable to non-corporate entities? The answer is no. Very interesting. The answer is accounting standards for non-corporate entities are accounting standards issued by the Institute of Chartered Accountants of India. That accounting standard cannot be imposed on the client. However, what is told in the accounting standard literature is accounting standards are mandatory for the members who are doing the audit of such a non-corporate entity. So indirectly, it is mandated on the non-corporate entity also, not directly, because our institute cannot be a regulator of such an entity. Institute regulates the members who in terms are auditing. So therefore, through them, the accounting standards are of the Institute of Chartered Accountants of India will be required to be complied by such an entity. Otherwise, they need not comply. I have to give a qualification in my audit report saying that these are the standards which have not been complied, and what is the quantitative implication of not following that particular standard. I cannot just say accounting standard 15 provision for gratuity has not been has not been calculated or not been captured in the financial statement. I'll have to go to the extent of saying it has not been done, and if it is done, about 15 lakhs of provision has to be done. So 15 lakhs of profit will fall and 15 lakhs of liability will go up and 15 lakhs of net worth will come down. So I have to give the complete picture on the profit and loss account and on the balance sheets. Should previous year's figures be given in the financial statement of a non-corporate entity? Our guidance note, the guidance note on tax audit gives a format for, in the end as an annexure, it gives a format for non-corporate entities, and that is only a recommendatory format. And in the recommendatory format, they also give the corresponding figure, corresponding financial year's figure to be mentioned. So if you follow that, you're going as per the guidance note. And as I told you, if you don't follow that, there is no problem. But I would say you'll better follow it, because the corresponding figure sometimes gives you a hint if you have wrongly calculated some figure in the current year. And in any case, in 3CD, today for some of the strategic figures like turnover, net profit ratio, gross profit ratio, you anyway give the previous year figures in the 3CD report. What additional disclosures are required to be given in the financial statements? When in the case of a non-corporate entity, like in the case of a corporate entity, they have to give certain disclosures. It is not just balance, just not Excel statement. There should be some statements coming from the Word also. I mean, in that sense, you can have words also in Excel, that's a different issue. But there should be some disclosures, some notes in the non-financial statements also. So what are the popular disclosures that are required to be given in a non-financial, non-corporate entity? It could be a proprietorship concern, it could be a partnership firm, it could be an LLP. Disclose information mandated in the applicable accounting standards in the financial statements, method of accounting, whether accrual or cash, method of inventory valuation. Now, anyway, all these things are required by virtue of ICDS also. Of course, ICDS will be applicable only if the entity follows an accrual system of accounting. If they're following cash system of accounting, ICDS is not applicable. Revenue recognition, property, plant and equipment, intangibles, depreciation, amortization, impairments, foreign exchange fluctuations, whatever disclosures, how did you convert it, all those things have to be disclosed. Investments, what are the various types of investments, how did you value those investments? Employee benefit, disclosures on account of employee benefits, borrowing costs, related party transactions, most important. Most of the maybe the taxation, audit, quality review board will be on account of non-compliances of all these, especially with respect to non-corporate entities. The related party transactions, AS 18, AS 15, these are the things which generally will not be complied by the non-corporate entities, which the auditor has to get it ensured for compliance. Income taxes, especially provision for income tax for that year, the current tax. You cannot say whatever tax paid is debited to P&L account, I'll add it back. That is not the way. You have to, strictly speaking, capture the current tax and deferred taxes even in the case of a non-corporate entity. Provisions and contingent liabilities. Contingent liability disclosure, provisions have to be provided. Whether or not it is allowed for income tax purpose, provisions, employee benefits has to be debited, and disclosures according to the standards have to be shown. The items that may require qualifications in the audit report on account of not following the above disclosures or not following any accounting standard will come inside the audit report rather than in the notes to financial statements. Please note that qualifications cannot be replaced with notes to accounts. And especially, confirmation for balances have not been received, or reconciliation with debtors and creditors are pending, cannot be a matter of note. If it is a matter of note, that cannot be a matter of EOM paragraph in the financial statement, in the audit report. It has to be a qualification rather than just a mention in the notes to accounts. So non-compliance of mandatory accounting standards such as non-provision for income tax, employee benefits, popular ones I'm talking about, confirmation for balances. So SA 505, external confirmations have to be taken, and especially for material items, it could be positive or negative. When we talk about negative, I will say, as per my books, this is what it is. If you differ with that, please come back to me. So that itself is sufficient. If you differ with that, please write to my auditor, give the auditor's address and directly ask him to communicate. Earlier, we used to send it by post. Today, it could go by email also. But when you are doing by email, please ensure that the email IDs are correct. In case of an LLP, should reporting of tax audit be in form 3CA or 3CB? Now, what is the difference between 3CA and 3CB? If you look into the format, both 3CA and 3CB refer to 3CD as an annexure. So there is, for both 3CD is a attachment. Now, in the case of 3CA, there are only 3 clauses. In the case of 3CB, there are 5 clauses. In 3CB, you are auditing the financial statements for the first time. Therefore, 2 additional, now these three will match in 3CA and 3CB. In 3CB, you have got additional 2 points to talk about the reference to the financial statements. I have received all the information and explanation, and I have the financial statements are true and fair. And then you have one extra, in fact, clause number 3 of 3CB, clause number 3 of 3CB talks about qualifications, if any, with respect to financial statements. So 3CA I use when the financial statements are audited already by virtue of some other statutory requirement, and I am now attaching that financial statements and going to give a 3CD report to talk about the deemed income, type 1, type 2, and other disclosures. Whereas 3CB is purely an audit report on financials and plus a reporting on 3CD matter. Reporting on 3CB matter. Now, what is it? Whether LLP should be given in 3CA or 3CB. Now, what we'll have to see is whether LLP has to be audited under the LLP Act. If the answer is yes, then it should be in 3CA. Otherwise, it should be in 3CB. Now, let's answer the question whether LLP should be audited under the LLP Act. The LLP Act has told that every LLP need not be audited. In case the following 3 conditions are complied with, then LLP shall be audited under the LLP Act. They have not given the format of the financial statements like Schedule 3 or whatever, but it should be audited independently. And if I'm auditing under the LLP Act, I have to use the SA 700 format and give the audit report on the financials. So what are those 3 conditions? Condition number 1, the turnover of such an LLP is more than 40 lakhs. The contribution, that is a capital, is called contribution in LLP, is more than 25 lakhs. Or the partnership deed expressly requires the audit. The partners have decided that it shall be audited. In these 3 contexts, it shall be audited. If it is audited and the SA700 report is given, then use 3CA. Otherwise, use 3CB. Because then, if otherwise means you have not done the audit and given a form 3C, SA 700 report, SA 700, 705, 706 report. So now you are giving under 3CB the report on the financials and on the 3CD separately. Now let me take you straight away through the format of 3CA. Now if you look at the format of 3CA, it has got, we report that the statutory audit of Mr. So-and-so was conducted by me or by Mr. Dugarchand, some other firm. Okay? Then Dugarchand and company will become the statutory auditors. I am only doing the tax audit. The audited profit and loss account for the period ended beginning from so-and-so and the audited balance sheet is annexed. Then the statement of particulars required to be furnished under 44AB is annexed herewith. It refers to 3CD. And in my opinion, and to the best of the information, according to the examination of the books of accounts, the particulars given in 3CD are true and correct. Now, please understand this word true and correct. whatever I'm giving here is correct, is what I'm going to affirm in 3CA. In 3CB, let me tell you, point number 1, we have examined the financial statement. There cannot be Dugar Chand there. I am only doing the audit because 3CB, first time I am doing the audit. Okay, so I am doing the audit of that entity and I am certifying that the profit and loss account and balance sheet are in agreement with the books of accounts. Then I report the following observations. I am reporting the following observation inconsistency. What is that inconsistency? This inconsistency is with respect to the financial statements. What in 3CA I would have given it in the main audit report. Okay, here then I'm also saying I've obtained all the information and explanation. In our opinion, proper books of accounts are maintained. The said financials are true and fair. That means the balance sheet is showing a true and fair position and profit and loss account is showing a true and fair profit or loss for the year. So this is true and fair. And then the statement of particulars required to be furnished are given in 3CD and such particulars are true and correct. Now, if you look at this, the observations with respect to 3CD is given in item number 5, whereas in 3CA, the observations with respect to 3CD are given in item number 3. So observations on 3CD has to be given in both 3CA and 3CB. It will be under clause 3 of 3CA and clause 5 of 3CB. But observations on the financial statement in the case of 3CA will be given in the main audit report, whereas in case of 3CB, it will be given in clause number 3 bracket B. So that is the answer for question number 10.2. What are the various observations or qualifications that could be given under clause 3 of form 3CA or clause 5 of form 3CB? So we have understood what it is. Now, while filling form 3CD, what are the general principles to be kept in mind with respect to the following items? Where there are judicial pronouncements. Now, just now we talked about judicial pronouncements for 14A, let us say. In the case of an exempt income, 1 crore, I have got exempt income and I have spent 30 lakhs. So I said that 30 lakhs will be disallowed. Now let us take a situation where I have invested in an entity, and I have taken a loan or I have spent some money for investing. That interest or expenditure is debited to profit and loss account. But from that investment, I have not got any dividends. So the question of disallowing any income, the question of not taxing the exempt income does not arise because I did not have any exempt income. So should the expenditure in relation to that exempt income be disallowed? There are various judgments to say if the exempt income is not there, the expenditure should be fully allowed. Then for an accountant, it actually does not make sense. But there are legal judgments to say this. Okay, because this is a potential income and an expenditure in relation to a potential income also should not be allowed. That is an accountant's way of thinking. Having said that, let's go with the judicial way. The judicial pronouncements have held that, and we have only appeared before the courts and got our judgments and clients relieved of that particular disallowance by quoting the various judgments. The judgments are here, 14A. Chaitanya Properties, Karnataka High Court, Chakam Invest, Delhi High Court, Shivam Motors, Allahabad High Court. So like various high courts have held that if there are no exempt income, the expenditure in relation to that income should not be disallowed. As a tax auditor, how do I deal with it? So as a tax auditor, I have to bring out these case laws and say, because of these case laws, I am not showing it as exempt income. Where do I show? This is what I said in 3C. A, you are giving it under clause number 3, and in 3CB, you are giving it under clause number 5. Similarly, disallowance of genuine cash payments to electricity companies, 40A3, for an electricity company or a water board, if it is given, then it should not be disallowed is what is held there. So therefore, you can, if somebody has given 12,000 rupees electricity charges and paid it in cash because it was paid after the due date, they collect only in cash, then these case laws can be in your favor. So we already talked about journal entries. Journal entries for the purpose of 269SS, 269T need not be reported, are not subject to 271D penalty or 271E penalty. So therefore, they can be considered as not being reported by taking these case laws and giving the references in your audit report. So that's the answer. Where there are judicial pronouncements, when there are conflicting judicial opinions, the role of accounting standards, guidance notes, standards issued by ICAI. We talk about the role of later on. So this is what we already talked about. Interest on inventory, I have already talked about it. And we have already seen 3CA, 3CB difference. In 3CD, very interestingly, in 3CD, with respect to clause 3 and clause 5 of 3CA and 3CB respectively, the department itself has given in the schema what standard observations could be given. They said proper books of accounts have not been maintained. In fact, you're giving a disclaimer actually. Therefore, we generally don't use this. Information and explanation not provided, not a good enough. That means it's not a good client. Documents not made available. Worst case situations. Instead of giving this, it's better not to take up the tax audit. Proper stock records are not maintained by the assessee. Quite possible. That's why I've given it in a different color. Valuation of closing stock is not possible. Then it is very difficult. You cannot give such a thing. It should be valued properly and given. Otherwise, it becomes a qualification. Yield or percentage of wastage is not ascertainable. Quite possible. Records necessary to verify personal nature of expenses not maintained by the assessee. TDS not verified. Very bad. Records produced for verification of payment through account pay check were not sufficient. This normally we give. Not possible for us to verify whether loans or deposits have been taken or accepted otherwise than by account pay check or bank draft, because I don't get to know whether it is paid by account pay check or account pay draft. So I normally give this disclaimer. Amount of expenses related to exempt income under 14A could not be ascertained. Creditors under MSMED Act are not ascertainable. Prior period expenditures are not ascertainable from the books. Fair market value of the shares not ascertainable. Reports of audit carried by excise service tax department not made available. GP ratio is not ascertainable from the financial statement. Information regarding demand not made available. And any others which you want to give can also be given. So most of the top ones you see for once as a matter of audit checklist to see if everything has been gotten. Otherwise, if it is not gotten, like whatever is given in the violet color could be a possibility, but whatever is given in black and red, please avoid giving such things. Rather disclaim the audit rather than give such a disclosure. Anything else you want to give, you can give it under others. Next, we come to some very interesting point of discussion. Tax audit report requires matter in form 3CD, just as we saw, to be certified as true and correct. So, should the tax auditor give an absolute assurance as against a reasonable assurance given in the statutory audit, wherein the auditor certifies the accounts and financial statements are true and fair? Now, let's understand what is the difference between true and fair and true and correct. Are they standing in the same platform, or as is understood, true and correct is more than true and fair? Let us come to an understanding. Definitely, true and correct stands one step above than true and fair. But in both these cases, I am giving a reasonable assurance, but not an absolute assurance. Now, if you go to our standards on auditing, and SA 200 and the framework for assurance engagements, they talk about audit. Audit is capable of giving only two types of assurances to anybody. Only two types of assurance. Although there can be four types of assurances. The four types of assurances are absolute assurance, reasonable assurance, moderate assurance, and limited assurance. Whereas our standards do not talk about these two. They talk about only reasonable assurance and limited assurance. Absolute assurance cannot be given by an auditor. Absolute assurance is only an assurance which can be given in a certificate. Now, where I say based on the income tax return, his income is so and so and taxes paid is so and so. So I'm talking about one document, and in relation to that document, I'm giving an assurance which could be a certificate then. It becomes a certificate. In an auditor certificate, I'm giving a matter of fact and not a matter of opinion. Now, whenever I'm giving a matter of opinion, it has to be only a reasonable assurance, or it could be a limited assurance. Sometimes back when I was a student, we were also talking about moderate assurance. Now, what is moderate assurance? Moderate assurance means lesser than reasonable, but more than limited, something more or less. It was more or less type of moderate. So the word moderate itself is not very clear. So we wanted to tell to the user of the financial statement, user of the audit report rather, that I am not giving a reasonable assurance, I'm not giving an absolute assurance, I'm giving you only a limited assurance. So therefore we use the word limited assurance rather than moderate assurance. So today we can talk about, for all the standards on auditing, talks about only two types of assurances. One is the reasonable assurance and the other one is limited assurance. So even for 3CA and 3CB, the assurance that I can give to the department is only a reasonable assurance and not a absolute assurance. So let's talk about assurances, the framework. An engagement in which a practitioner expresses a conclusion designed to enhance the degree of confidence of the intended users. Finally, my report is not meant for the company, it is meant for the users, which could be the bank, the shareholders, the investors, etc. Other than the responsible party. The responsible party is the management, those charged with governance. About the outcome of the evaluation, there are two types of assurance engagements a practitioner is permitted to perform. One is reasonable assurance, where what I'm doing in a reasonable assurance is reduction in assurance engagement risk to an acceptable low level in the circumstance of the engagement. So I am reducing the risk to an acceptable low level. Beyond that, I cannot go because there are inherent risks in audit. And then finally, I give a positive form of expression of conclusion. I am saying I'm reasonably okay, it is true and fair. In a limited assurance engagement, which normally we give it when we are doing a review, limited review, when we are doing the quarterly financial statements, even for listed entities, we give limited assurance engagements. So there we say, objective of limited assurance engagement is reduction in assurance engagement risk to a level that is acceptable in the circumstances of the engagement, but where that risk is greater than for the reasonable assurance, because I'm given less time, I'm doing it very fast, I'm not going through, I'm doing only analytical study rather than the coachings and things like that. I do an incremental audit rather than a substantive and a control audit in that sense, but where that risk is greater than, therefore it is greater than the reasonable assurance engagement as the basis for, and I'm giving a negative form of an expression when I have done and I have not come across anything to make it untrue and unfair. So I'm saying such type of a negative assurance. So that's the point I'm noting. Then let me finish off. Can test checks, I'm now coming to a very important thing, can test checks be used for giving details in Form 3CD in case of huge volume of transactions, especially 40A3, 269SS, 269T, 269ST, TDS reporting under Clause 34. Clause 34 is a very difficult, we give a lot of importance to Clause 34. It may look like one clause in the 42 clause, but then Clause 34, TDS, in fact, when this was coming in, our institute made a plea to the department saying that please keep this as a separate report. TDS report itself is a separate report. Don't mix it up with the 3CD report. But then they said, we don't want to have multiple reports. We want to have everything under one umbrella, and that is how it has come. So now the question is, can test checks be used for giving details in Form 3CD? When you are especially giving true and correct. When you are giving true and correct. Now let me tell you, what our guidance note says. Our guidance note very beautifully went on to say that the various audit aspects can be segregated into two. That which is possible for you to check through the system. The exceptions can be thrown out of the system. Like for example, 40A3, more than 10,000 rupees. If I scrutinize the cash ledger, I will be able to, the exceptions will be thrown by the cash book itself. Okay. So similarly, 269SS and 269T, the cash book itself will throw out the exceptions. Of course, journal entry apart. Yeah. So there are certain aspects like 40A3, 269SS and 269T where I can take the help of the computer system or the management information system to throw out exceptions for me to report. In that context, I have to do a 100% check. However, with respect to other aspects, especially 40A1A, for 34, whether TDS has been done in all the respects, and also in 269ST, look at this, 269ST is, have I collected more than 2 lakhs per person, per transaction, per event, PTE, person, transaction, event. So per person per day, Per person per day, it will be thrown by the system. But per transaction, suppose it is a transaction of, let us say, 10 lakhs, and I have collected 1 lakh every year for every day for the next 10 days, the system cannot throw out the exception because it is in relation to a transaction. Or if it is in relation to an event. So again, the system cannot throw out that particular exception. So therefore, there I can rely on test check or sampling is what the guidance note says. It doesn't stop there. Of course, it has to be gotten into the details. Now, what does it say? TDS compliances under clause 34. If the transactions are voluminous, I think you are the auditor of Big Bazaar or an entity with multiple branches, huge volume of transaction. Test checks and compliance tests can be done, told in para 58.9 of the guidance note. Primary responsibility to fill information is that of the assessee. Now then, if I come on to say, how is it true and correct, then I'm saying the matter will be correctly filled in by the assessee. 3CD is not to be filled in by the tax auditor. It has to be filled in by the assessee, the management. They have to correctly fill in. They have to give me a management representation letter saying that we have done TDS wherever it is required. And we have properly filled in the information in clause number 34. Now you verify. My verification can be on a test check basis. He has filled in fully. Tax auditor must ensure that no item is omitted in the information provided to him. I indicate extent of test check in the audit working papers. Now I have to find out which are the test checks I have done. What is the basis of selecting? Tax auditor can apply materiality and audit sampling technique as per SA 530. So all these are told in guidance no. Based on effectiveness of internal control. Of course, before I do all this, I as an auditor should be satisfied that the controls in the company are proper. If the control is weak, they don't have an internal audit system, they don't have a proper maker checker and other controls as told in SA 315, then my reliance on sampling and test check will come down, substantive test should go up. So that is what is meant by this. However, the same guidance note says in 40A3 269 SS 269T, ST is actually to be treated like clause 34. 100% examination of the testing must be done. If reporting is done for 269T or ST because of voluminous transaction, based on auditor assessee certificate, it shall be reported as an observation in clause 3 or clause 5 as the case may be. One very important standards on auditing which I forgot to. Now I'm getting into the standards on auditing. Standards on auditing referred in guidance note. Overall objective of independent auditor and conduct of an audit in accordance with the standards on auditing. So what are the various standards that have been referred in our guidance note? Auditor is to obtain a reasonable assurance that the financial statement as a whole are free from material misstatement, whether due to fraud or error. And there we say, what is reasonable assurance? A high but not absolute level of assurance. We are very clear. Now, reasonable assurance is less than absolute assurance. Reducing assurance assignment risk to zero is very rarely attainable or cost beneficial as a result of factors such as use of selective testing, inherent limitations of internal controls, fact that most evidence available is persuasive rather than conclusive, use of judgment in gathering and evaluating evidence and forming conclusions, judgments are involved, and characteristics of the subject matter when evaluated or measured against a predefined criteria. When I'm predefined criteria could be a compliance with an accounting standard or compliance with an ICDS. When I'm following the when I'm saying that ICDS is complied with, the subject matter itself, whether inventory has been properly valued as per ICDS means there may be so many items in the inventories. I cannot check each and every item to tell that overall inventory valuation is okay. So the subject matter itself is such that it cannot be tested against ICDS or the predefined criteria on a one-by-one basis. So therefore, it is a reasonable assurance and not a high level of assurance. Now, next point is, how will the income tax department know that reasonable assurance is provided by complying with the standards on auditing, even in case of tax audit report by the tax auditor? Now look at this. Whereas 3CD tells that you have to give 3CA and 3CB says that the information provided in 3CD is true and correct. If it is true and correct, and you are following the yardstick of true and fair as told in essays, how should the income tax department come to know that you are following reasonable assurance? Where will you say that I followed? Because in 3CA or 3CB, nowhere you're using the word. They have not put it in the form about anything to do with reasonable assurance. This is where I'm saying the guidance note has given us a guidance. The guidance note says that as an auditor, you should put in certain words. You should put in certain sentences inside the 3CA and 3CB report to tell to the department that I have complied with the standards on auditing. The 3CD is filled by the assessee. It is his responsibility. He has given me a statement that he has done it properly. I have verified based on the standards on auditing. So these wordings I have to put inside the 3CA and 3CB report under clause number 3 or clause number 5 as the case may be. If you remember that they had given 16 item and 17th item others. Under others, I had written SA 700. So this is the statement which you'll have to copy and paste it there. So what does it say? Assessee's responsibility for financial statement and the statement of particulars in form 3CD. So we are telling he is responsible for that statement. He is responsible for filling up the information inside the 3CD. What is the tax auditor's responsibility? I will say our responsibility is to express an opinion on these financial statements. We have conducted this audit in accordance with the standards on auditing issued by ICAI. Those standards require ethical requirements, planning, performance, materiality, etc. We also take into account the internal controls. We believe that the audit evidence we have been provided is sufficient and appropriate. Sufficiency in terms of quantity, appropriateness in terms of quality, to provide a basis for our audit opinion. We are also responsible for verifying the statement of particulars required to be furnished under 44AB. We have conducted our verification of the statement, that is the 3CD, in accordance with the guidance note on tax audit. So this is where I'm saying, as per the guidance note, this is the framework based on which I have done the audit. And this framework tells me sampling, test check is all permitted in relation to certain aspects. So that is where I'm conveying to the department that this would help me in actually getting protected tomorrow in case the department levies 271J and tells that, look here, 3 items of TDS I have found out, but you had not found out. So when they say that, maybe this will come in as a defense. This is only a slide to show that SA 700, I am supposed to say that I have done the audit and the format has got changed. I am not getting into the details of that. One of the things I am saying is audited as per standards on auditing. Here also it says, we have conducted the audit in accordance with the standards on audit issued by the Institute of Chartered Accountants of India. So my next question therefore is, how many standards on audit are there? Are all of them mandatory? Which are the important standards on auditing applicable while doing the tax audit? So we are getting into, from the taxation, we are now coming into the standards on audit in general, and what are the standards on auditing relevant to tax audit? Now, how many standards on auditing are there? If I ask you straight away a question, this particular book, which comes in 1A, 1B, 2, there are 3 volumes here now. This particular book, all these 3 books put together, this is called as Handbook of Auditing Pronouncement, Compendium of Engagement and Quality Control Standards. Engagement and Quality Control Standards comprises of 4 types of standards plus 1. Now, what are the 4 types of standards? One is standards on auditing. We have got 38 numbers. Then we have got standards on review engagement, 2 numbers. Mostly standard on review engagement will be a limited review done by outsider other than the statutory auditor or done by the statutory auditor. So there are 2 types there. Then standards on assurance engagement. So we have got standards on assurance engagement. What is the standards on assurance engagement? It is an assurance in relation to a financial statement not being historical financial statement. It consists of financial information in an assurance engagement. It is not in relation to historical financial statement. It could be project reports. It could be prospectus. It could be in relation to a control service organization. So that is what is given in standards on assurance engagement. Then we have got standards on related services. Standards on related services where I don't give an assurance. where I don't give an assurance. In fact, this SRS2, there are two SRSs which we give. An important one which we may have to adopt when we are giving the provisional financial statement, that is told in 4410, SRS 4410, which tells if I am asked to give a provisional financial statement, I cannot just give a financial statement and put a seal and say subject to audit or provisionals. I have to annex it with an audit report. The provisional financial statement should go with an audit report using SRS 4410 format and the requirement there, which says that in the report I have to say this is not audited. It is only reviewed. I mean, it is not even reviewed. I only compiled the information from the books of accounts and presented it in the format attached. I have not audited is what I have to make a statement. So I cannot give a statement. Also, please note, let me just straight away take you to that format. Yeah, 4410. When provisional financial statements are given, it's very important. It is only a compilation of information. Standard on related services, 4410. Because they say that the moment you put a seal and signature in the financial statement, they think that it is audited. So please don't do that. So we give a report like this. We have compiled the unaudited balance sheet. We are saying unaudited balance sheet, etc. The management of the entity is responsible for, we are defining. Then we are saying the balance sheet and profit and loss account are in agreement with the books of accounts. We have not audited or reviewed. We have not even reviewed these financial statements and accordingly expressed no opinion thereon. So that is the point which we are talking about in SRS 4410. So if you see the standards on auditing, standards on review engagements, standards on assurance engagements are all audits in a way. But standards on related services is not an audit. So that is why it is kept as a separate. So 1, 2, 3 are given in one color. The standards on related services is not an audit. Standards on audit, of course, is audit. Standards on review engagement is lesser than audit, but I'm giving an opinion on the financial statements. Standards on assurance engagement, I'm giving assurance with respect to project reports. I'm giving an assurance with respect to project reports or prospectus or control service organizations. Let me also tell you, there is an overriding standard in relation to this that's called the SQC, which is covering all the standards. That is why I put it in the middle, plus standards on quality control 1, which will make the total number of standards. I said how many standards are there? There are totally 46 standards which one has to be aware of when he calls himself as a tax auditor or statutory auditor. So 38 plus 2, 40 plus 3, 43, 45 and 146. So standards on quality control is the overarching, which tells how the quality of the firm should be, how should you maintain your documentation, for how many years you have to maintain, things like that. And standards on audit is today statutorily recognized inside the Companies Act. I'm just trying to put it that way. 143 subsection 9 of the Companies Act says every auditor shall comply with the auditing standards. Who issues the auditing standards? They are told auditing standards will be henceforth issued by the central government, recommended by ICAI in consultation with NAFRA. But until such time the central government comes out with a notification, that auditing standards issued by the institute will have to be complied with. So how many standards on auditing are there? 46. Are all of them mandatory? The answer is yes. All of them are mandatory to the extent applicable to that particular situation. What are the important standards on auditing applicable while doing the tax audit? So these are the various types of standards. Yeah, I mean, this is another point I always try to address on audit. I mean, I was always telling DC Jain also one point that whenever there is a topic on audit, and I see that today 575, 580 people are there, but then only when audit is being talked about, we have only 10-20% of the numbers here. Therefore, we have to sell audit. We have to sell audit in the name of taxation. Buy one, get one free. So today we are selling taxation and giving audit as a free package. So then most important, as I was telling you, Dinarji, that audit, and I'm sorry, you have also told me that you wanted everybody to focus on audit and audit information, so much so that our institute also, today out of the 20 hours of CPE that every chartered accountant has to go through, 4 hours he has to go through audit CPE programs. So very important. I think Ms. Dungarchan, you'll have to put this today's topic under the audit heading rather than under any other heading, so that they get 3 hours of audit CP. So prospective financial statements. Let us say when I'm giving a project report, can I put a seal and signature and say that this project report is certified by the chartered accountant? Can I do that first of all? The answer is given in Standards on Assurance Engagement 3400, which says while drafting the report, you have to comply with the requirement. What is that? First of all, the standard says CA will be deemed to be guilty of professional misconduct if he engages in estimation of earnings contingent upon future transaction, nothing but project report, in a manner which leads to believe that he vouches for the accuracy of the forecast. When I cannot say it is accurate, because after all it is a project report. ICAI Council, CA can participate in the preparation of profit or financial forecast and can review them provided he indicates clearly in his report source of information, where the turnover has been given like 10 crores, 100 crores, 700 crores. What is the source of your information? Some statistical data, basis of forecast, major assumptions made in arriving at the forecast, and he does not vouch for the accuracy of the forecast. And finally, he gives an opinion like this. Based on our examination of the evidence supporting the assumptions, nothing has come to our attention which causes us to believe that assumptions do not provide a reasonable basis for the forecast. You see a negative assurance. Further, in our opinion, the forecast read with the notes thereon is properly prepared on the basis of the assumption. I am not certifying that the financials are correct. I am only saying the financials are as per the assumptions. If the assumptions are not, when what we say in economics, ceteris paribus, other things being equal, and generally other things are not equal. So we are saying other things being equal, as per the assumption, the financial statements are properly computed. Using appropriate accounting principle, actual results are likely to be different from the forecast, since anticipated events might not occur as expected and the variation might be material. So like in the insurance policy, they say subject matter of solicitation, actuals may differ from the past. So we have to give all these disclaimers when we are actually giving the project report information. Similarly here on the provisional financial statements, especially this season, because the audit is not completed, the banks are releasing additional funds. They ask the auditor to come and give a provisional financial statement. Just don't put your seal and signature on the financial statement, and rather give this particular, comply with the 4410 requirement. Most importantly, some of the banks have the audacity to tell the auditor to give a report saying that the difference between the provisional and the audited will not be more than 5% variance. Nonsense. The banker cannot tell me to give such a certificate. And if I give such a certificate, I will be a great fool. Why would I tell that? Because if I have done the audit, I would rather give an audited financial statement itself. If I have not done the audit and I am giving that it will not be in variance more than 5%, tomorrow when I actually do the audit, if it is more than 5%, should I go with the actual situation or should I go with this undertaking? I have to go with, if I go with that, this will be wrong. If I go with this, that will be wrong. So therefore, I should not give such an undertaking to anybody. Rather, okay, if the client is so satisfied or so confident about the numbers that he has prepared, and he feels that, in his opinion, the auditor, the provisional financials that he is giving to the bank and the audited financial statements will not be in variance of more than 5%, he can make that statement. I cannot, as an auditor, make that particular statement. So please be aware of that. Audit documentation. SA 230. What is audit documentation? I mean, I'm sure all of us know. We talk about audit working papers, work papers. All these are synonyms for the word audit documentation. It refers to the record of audit procedures performed. What are the procedures? It could start with planning, program, then who are the team lead, who are the team, who led the team, who was the engagement partner, who was the review partner. All the procedures I documented. Relevant audit evidence obtained. I talked about SAAE, which is here. Sufficient and appropriate. Sufficient means I have gathered enough evidence and I have gathered the right evidence, the appropriate evidence. So right or appropriate is a qualitative aspect and sufficiency is in terms of quantity. So I have gathered enough evidence to come to my conclusion. And how did I arrive at the conclusions? It could be the question and answers, or how did I discussion between the team lead and the team etc., would all be documented and formed part of the file. So that is what is expected in SA 230. Process of collecting and preparing working papers like audit plan, program, significant observations, queries, schedules, lists, management confirmations. So this provides the basis for obtaining sufficient appropriate audit evidence. That audit was planned and performed in accordance with standards on auditing and applicable legal regulatory framework. One very important mantra we always tell is, if the audit is done, but you don't have documents supporting that, then it is as good as not done. Let me reiterate, tomorrow your audit will also be subject to peer review audit or taxation audit, quality review board audit, or maybe some CBI audit or whatever audit. I don't want to create the fear, disciplinary proceedings. To say that you have done the audit, you should have proper documentation. If you have done the proper audit, but everything was in oral and hearing basis, unless it is documented, it is not said to be done. So audit not documented is equal to audit not done. While on the subject of audit documentation, what is the mandatory period for which audit documentation must be retained? Now we know section 44AA of the Income Tax Act tells that books of accounts have to be maintained. For how long? 6 years. 6 years. And if it is in relation to foreign, it can go up to 10 years or 16 years also. I'm not talking of the exceptions. Normal books of accounts should be maintained is for 6 years as per Income Tax Act. As per Companies Act, I have to maintain it for 8 years. As per Companies Act, books of accounts have to be maintained for a minimum of 8 years. Audit documentation, SA 230, read with the SQC1, says that the audit documentation, the file that we have to keep it as a proof if somebody asks for it, should be retained between the average of 6 and 8. The average is 7. No, earlier it used to be 10 years. Now they have brought it down to 7 years. From what date? Not 7 years from 31/3/2020. 7 years from the date you signed the audit report. Signed from the audit report. So you should have 7 years documentation with you. So this is what is told in SQC1 and SA 230. What is the time limit specified for completion of assembly of audit documentation? This is a very interesting thing. Should I do the audit documentation alongside the audit? That is the best case scenario. Or do I have time to, because I'm so busy doing the audit and completing the signatures because of the deadlines. Now we all know that we are working against the deadline, and all of them, all the clients come to us at the same time. So therefore, is there an additional time made available given to me for doing the audit documentation? The answer is given in SA 230 and SQC1. What they say is, they said assembly of final audit file is ordinarily not more than 60 days after the date of auditor's report. So within 60 days, that means within 60, as early as possible, not later than 60 days, you should compile your file and pack it and keep it in the filing rack. So within how many days? Within 60 days. What can you do? Please understand, does not involve the performance of new audit procedures. After signing the audit report, you cannot do the audit. There cannot be new audit procedures thereafter. What can be done is deleting or discarding the superseded documentation, mostly administrative in nature, sorting and collating and cross-referencing working papers, signing off on completion checklists, documenting audit evidence that the auditor has obtained, discussed with the team members. So those are the things which can form part of the document. What you had scribbled may now be properly typed and fed and kept it, things like that. Those are the things which can act as the guidance. So let's get into standards and audits referred to in guidance note. Agreeing the terms of audit engagement. So the moment you get your audit appointment letter, you should have an engagement letter. Now, before you go in for a marriage, there should be an engagement. So what is an engagement? The auditor writes to the assessee saying that these are your works, these are my works, I will give this report, these are my fees. Now, that is an audit engagement letter before commencing the audit to avoid confusion. Draw out clear-cut responsibilities, including the framework. And very importantly, 9.14 paragraph of 3 guidance note says, authenticate the tax audit report first by let him fill it, let him sign it, and then give it to me, then I will sign it. Very important. If you see the entire procedure of e-filing, it is slightly Urduish. Why I'm saying it is Urduish? Because it says CA to register as tax professional. Assessee will add CA to his profile. He'll confirm. Then CA will upload the 3CD report. He will say, yes, auditor has done a good job. I mean, assessee will actually approve the form filed by the CA. What should have been the thing is, the client should have filed and then I should have attached as saying everything is fine. But because of technological reason, it goes the other way around. I am filing the report and then the assessee says, I am approving the form filed by the CA. So that is the required thing under the electronic environment. But what we are supposed to do is, he has to fill in, sign it and give it to me. When he need not give a printout today in the work from home culture, maybe take a thing and sign digitally or in whatever manner, in a PDF he can sign and send it to me. I will thereafter look into it and then give my opinion. That is what is expected of SA 210. SA 299, responsibility of joint auditors. An auditor need not be bound by the majority view. In case there are more than one auditor, joint auditors 299. Normally single audit report, if opinion differs, separate report is also fine. So SA 315 is very important when to take care of how the internal controls are working. Is there a risk of material misstatement on account of the entity's environment? Very important when we are doing the IFC audit. So tax auditor must study the impact from the perspective of the management integrity. What is the tone at the top? Whether they are people with the compliant minds, having all the systems and processes in place, then you can rely on that more. Otherwise, you have to do a lot of substantive testing. Then SA 510, initial audit engagement. If you are doing the audit for the first time, whether the opening balances can be relied, the return on value of the fixed assets, whether because based on that the current year depreciation will be done. So what should you do if it is not audited at all earlier? So give a disclaimer or a point saying that opening balances I have not verified. I'm responsible only for this year, audited for the first time. Audit sampling, as we already discussed, it can be complied with depending on the nature and volume and materiality and the internal controls. Tax auditor might design his tax audit program to reveal the extent of checking. Documentation should tell what is the basis of picking up the sample and which samples he has picked up. Subsequent events, if there are any subsequent events, what is that? How are you going to deal with that? Written representation. Audit appointment letter, engagement letter, then the written representation. Before you sign, he signs the audit report itself, but he also gives a written representation that whatever is whatever needs to be complied has properly been complied with. So he will say that we have not given anything more than 10,000 rupees as required under 40A3. We have not, and whatever is done has been shown in 40A3, disallowances under 3CD provided to you. So representations will be given like that. So written representation SA 580. The format of written representation is also given in SA 580. So please comply with that. Tax auditor must examine the details, but is entitled to rely on the management representation. But he should not rely only on that and do his audit. Very important. It's only a supporting evidence for him that when I'm just telling you in a worst case situation, if I am going to jail, he is also supposed to come with me to the jail. To that extent, it will help to have a company in the jail. But that itself cannot be a basis for you to give the opinion. Expenses towards earning exempt income, especially certain things, it is very difficult for me to call out. So there I rely on him, like exempt income, payment to 40A2B. How do I know who are his relatives? So he gives me a list of relatives. So based on that, of course, I will do my process to find out. I mean, he says we are only 3 brothers. How do I know that there are actually 4 brothers? If I become too familiar with them, I have a problem of familiarity threat. If I'm too much at a distance, I have a threat of this. So I have to make a fine balance and keep an eye and an ear to the ground to find out if he has got more brothers and sisters than what he has told in the representation letter. Otherwise, I can rely on the representation letter that is given by him. Then finally, SA 700, 705, forming an opinion, which we have already seen. 600, using the work of another auditor. Now, if I have a branch audit, then I can rely on the branch auditor report provided. He is a man of integrity, man of knowledge, etc. Using the work of internal auditors, I can rely. Tax auditors must study the principles of SA 610. Using the work of an auditor's expert. For example, when I am doing this I was talking about initially, fair market value, share premium collected in excess of the fair market value over the, when a share premium is collected from a closely held company, if more than the fair market value. Who should give me the fair market value? Earlier, the auditor could have given. Now it has to be given only by a merchant banker. So I can rely on a merchant banker. Similarly, legal opinion with respect to TDS on foreign remittances, I can rely on the outside expert. I may be permitted, okay, GST not routed to profit and loss account, thereby not claim it as an expense. Whether GST payable is required to be disallowed under section 43B and so be shown under clause 26 of 3C. This is a normal question which comes. I just wanted to end up my session talking about, started with taxation, end with taxation and a combination of accounting and taxation. So what this means is, for GST, I have collected it from my client. Let us say I have a 100 crores turnover and 18 crores GST. So 118 crores is my turnover. Now what I am following in my accounting is, I am not taking the 18 crores as a credit to my profit and loss account. I am crediting only 100 crores turnover into my profit and loss account and taking 18 crores as a separate account altogether. This is how we do the accounting. Now the question is, under 43B, this 18 crores, if I had followed 118 crores as a credit to my profit and loss account, I would have debited 18 crores when I actually paid. And disallowance of an expenditure which is debited to P&L account is fair. Now my question is, I am crediting only 100 crores to my profit and loss account. 18 crores is credited to a separate account, and I am whenever I am paying or I am adjusting it against the input tax credit. If I have not debited this 18 crores to my profit and loss account, why should I disallow that particular expenditure? That is the question. Now here one has to go back and understand the requirement of ICDS and section 145A, which says the entire turnover, purchases, inventories has to be done following the inclusive method of accounting. I mean, whatever we are following for accounts is actually exclusive method of accounting. The income tax wants you to follow, and then we go on to say whether you follow the inclusive method or exclusive method. For inventory purpose, it is tax neutral. However, on a situation like this, where if you had credited 118, you would have debited 18 crores. And having debited 18 crores, if it is not paid within the due date under 139, it will be disallowed under 43B. Now it makes sense. So therefore, if you have to follow inclusive method for tax purposes, and this debit should happen, and disallowance under 43B also should happen. That's the point I was trying to say. So I wind up my session by another 2 slides. It says Form 3CD, documentation to include appointment letter containing remuneration, who should sign, what are the useful information, and give the tax auditor of name of the earlier auditor. Engagement letter, the documentation should have the appointment letter, engagement letter. Engagement letter goes on to say, I will write a letter to him to say, these are the works that I am going to do. Look at this. He gives me an appointment letter. I give him an engagement letter. This is what you are engaging me for. And he signs, I sign, and he countersigns and gives it back to me. Management representation letter, he gives it to me saying that whatever filled in 3CD I have given and the information told there is, in a very childish way, God promise correct. Then if I have to say it is God promise correct is what he is going to represent before me. Then the audit program, including the checklist for 3CD audit report. Then let me also tell you there is a requirement from the institute for me to have a register of tax audits. How many tax audits I have done, so that I have a control that it should not exceed 60. Today, I may not have the control, but the institute will know how many tax audit reports I have signed by virtue of the UDINs that are getting generated. Even otherwise, they were getting to know. That's a different aspect. Documentation for 3CD should be separate, preserved for at least 7 years. Important for peer review, since this is also an attest function. Some specific principles. If any particular clause in Form 3CD is not applicable, state it is not applicable. For allowances or disallowances, follow the law applicable in the relevant year. Even though the form of audit report may not have been amended. Like this year, they'll say, what are the payments done under 115O? Dividend distribution tax. It may not be applicable. Just you cannot say why you are not paid, the company has not paid. Just say not applicable, because rules cannot override the act. Insufficient information. Qualify rather than withhold the entire audit report. Question number 18, I stop with this. Who is the tax auditor working for? Now this is a question which all of us have to answer. am I working for the client or am I working for the department? Now, if, look at this, जिस तालीम में हम खाना खा रहे हैं उसी में छेद लगाना की, तो किसका ताली बात कर रहे हैं हम लोग? I mean, whose plate are we talking about? Are we talking about the client? If I'm answerable to the client, even if I have to pardon his mistakes, then I'm working for him. Should I work for him because he has appointed me, and more importantly, because he is paying me the fee? I mean, this question is always there in my mind, saying that the moment I take a fee from the client, is that not a self-interest threat? Wish that the fee had come from the government, then that would have been a total case of independence altogether. Having said that, we have to understand that he has appointed me. Let me tell you, he has appointed me because, not because he likes me, but because of this particular Income Tax Act. Now, the Income Tax Act is the one which gives the power to me to get myself appointed to work for that particular situation and give a proper report, a true and correct in that sense report to the Income Tax Department. So the answer to this question has been given in a different way by our Honorable Prime Minister when he said this: the signature of the Chartered Accountant is more important than the signature of the Prime Minister. Now, this signature, maybe Narendra Modi cannot sign 3CD, 3CA report. The Chartered Accountant only can sign. So if I am signing this, if I have been given an absolute, what should I say, a right to sign, it is not a right, but rather a duty towards the department, duty towards the nation. So let's ensure that we do our jobs properly, not only to uphold our heads in high, but to keep the flag of our institute high. So thank you so much. So I end up with my presentation. I'm definitely more interested in seeing the questions and answering.
There are quite a number of questions which we will take. Yeah, Abhishek. Yeah, Abhishek, you are telling something?
No.
Okay.
Wonderful presentation. I was just saying.
Few things which I would like to tell all members. Members, one email has been sent to you regarding registration for the day after tomorrow's program. We request you to click the link and register yourself for the day after tomorrow program. Kindly do that before 8 p.m. today. Kindly do that before 8 p.m. today, so that much of load will come down. Otherwise, institute staff will have to do that manually. Kindly cooperate to that extent. And the link which you have shared regarding the materials, we have updated some relevant materials regarding guidance note, ICDS, and UDIN. And we have also uploaded specifically the SCP 3400 and SRS 4410, the full text which our speaker today, K. Gururaj Acharya, has spoken. And we will keep updating the materials. Today's materials and yesterday's material are not yet uploaded. As soon as we receive from the speaker, we will be doing that. So the information, and now we'll take
just to clarify what Chairman said is, for the next program he meets for the third day, the same tax audit program. For the third day is on Tuesday. Tomorrow we do not have it. It is being put on Thursday, on Tuesday. You will get a link request you to register. I know you have registered for today's program, yesterday's program. If you have not done or you are not aware, again you have to register. It is just a process because we are trying to migrate the systems and streamline it. So request you to please register when the message comes to you. Yes, sorry, Chairman, over to you.
Yeah. Sir, question on deemed income.
Value of gold in grams credited to dealer's account by manufacturer, particularly cement manufacturing companies, for achieving turnover versus taxability. I think question has to be properly framed. Value of gold credited to dealer's account by manufacturer, particularly cement manufacturing companies, for achieving turnover. If I understood the question, that if the company has received gold, if it has sold gold and received, or in lieu of its money is due, it has received the gold instead of money due, then naturally the gold, whatever is the value of the gold, that has to be credited to the profit and loss account. Or in any case, it will be a deemed income under section 56(2)(10). That would be my answer. Question number 2. Customs house agent pay delivery order charges on behalf of their client. The DO invoice is issued in the name of the client, whether CHS to deduct TDS. The apparent answer is it looks like yes. The customs house of agent paid delivery charges, order charges on behalf of the client. The delivery order invoice is issued in the name of the client. Whether custom house agent to deduct TDS. It is very fact specific.
Yeah, Gururaj, maybe if I can add, see, like I may be doing some work through other people, but I give a full bill. So it is based on my bill where I put GST. I think TDS has to be deducted accordingly.
Absolutely. Okay, next. So advance tax, advance paid to related parties for rendering services shall be treated as deemed dividend. Whether this has to be reported under 269 SS in tax audit report. Now, two things. Deemed dividend is separate than 269 SS. Deemed dividend, also we have gotten exceptions. There are case laws to say if it is an advance, we'll have to make a distinction between advance and a loan. What is the difference between an advance and a loan? An advance is what gets squared off through supply of material or services. If it gets squared off through supply of material or services, it is definitely not a loan. Okay? In that context, the question of deemed dividend will not apply. Now, whether this has to be reported under 269 SS, in the case of 269 SS, both advances and loans and deposits are taken into account. So therefore, you may have to report it. So please take that in. If it is given it in check or otherwise, you don't have to report that particular matter.
Yeah, the next question is from our past SIRC chairman, Arsumali Venkateshwara Rao.
A good friend of mine. Sir, please, happy to receive your question. An assessee who declared income as per presumptive rate. In fact, he is not having that much expenditure. Therefore, he has more money in his account than income declared as per presumptive rate. Can he show investment more than declared income? First of all, showing more investment, let us say 8%. I'm just talking about 8% case. If he has 8%, he has declared 8% and his actual income is, let us say, 25%. His actual income is 25%. He has to show 25%. The presumptive rates are given as the minimum rates. So when we say 8% minimum or actual, whichever is higher. So very important. So if his investment is, let us say, I'll put it in crores now. When one crore was his turnover and 8 lakhs is what he is offered for as income, whereas his actual income is 25 lakhs. If you are declaring only 8 lakhs and the difference of 25 and 8, okay, that is 17 lakh rupees. If you are keeping 25 lakhs as FD in a bank or gone to reduce the bank loan to the extent of 25 lakhs out of this, then on the 8 lakhs normal income tax will be levied. On this 17 lakhs income, income at the rate of 78% and 115 BBE will be applicable. So let us be very clear that in this case of presumptive taxation, 8%, 6%, 50% is the minimum, or actual, whichever is higher should be shown.
Yeah, Gururaj, this is a question which was posed yesterday. I am taking it today for everybody's benefit.
Yeah, whether threshold limit of turnover is per assessee, then why in Form 3CD Clause 12 there is a question whether profit and loss account includes presumptive income of any other business. So this is a very good question which we always enjoy taking this question, saying that it is actually in relation to an eligible business. 44AB says eligible assessee having an eligible business. So very interestingly, the turnover is in relation to an eligible business. And this could have come in the case of mostly a individual, and in some cases even in the case of a partnership firm. Mostly I don't see such a thing coming in the case of a private company. So we can have situations where I have a cement trading concern and a garment trading concern. Garment trading concern, I have, let us say, 5 crores and I am doing the audit. And in cement trading company, I have, let us say, 40 lakhs. I have got 40 lakhs. And for 40 lakhs, I show 8% and put it as an item. For 40 lakhs, I show 8% and show it under presumptive taxes. For 5 crores, I do the tax audit. So quite possible in 44AB, it is in relation to the eligible business. The limit is in relation to the eligible business, mostly applicable to individuals.
And so, Gururaj, what you are trying to tell is it is not per assessee, it is per eligible business.
Per business. Very interesting that is, yeah. Company has not provided for interest on delayed payment to MSME vendors. How to comment about this in tax audit report? Now, very interestingly, this is a matter of accounting. This is a matter of accounting. Now, under accounting standard 29, all the provisions have to be provided for. Now, if the entity has not provided for this particular interest, you will have to say in clause in the main audit report, strictly speaking, if it is a company under SA 700 report, this should be reported. I presume that this is a company because that is how we have started. Now, in the tax audit report, there is no mention because in the clause 22, I suppose, or whatever the clause is, in that particular clause on the comment, are there any disallowances under section 23 of MSMED Act? If you have debited it, then that is not allowed. In this case, you have not debited at all. So therefore, the question of disallowance does not arise. Yes, sir. Can a taxpayer with turnover less than 5 crores be not required to be subject to tax audit but have the requirement of TP audit? I think so. Suppose in this case, the taxpayer has a 5 crores and then the 95% threshold is complied with. That is 95%, only less than 5% is received in cash, total payment and total receipts, both the conditions. But then transfer pricing audit, the cutoff is more than 1 crore, you will have to comply with the transfer pricing audit. So I am afraid that although you may not be doing a tax audit, you may end up doing a TP audit. That answer is yes, possible.
But Gururaj, can you clarify why when the turnover is more than 5 crores, how can it be not subject to tax audit?
No, he said less than 5 crores. No?
Oh, less than 5 crores. Okay, I thought more than 5. Okay.
Yeah, less than 5 crores. I said 95% rule.
Correct.
Sir, an individual subject to tax audit for a year and for the next 6 years, he is not having turnover liable to tax audit, and in the 7th year, he has turnover attracting tax audit. In such cases, whether TDS provisions are attracted since there is no tax audit. I think all the sections are very clear. It is in the immediate preceding previous year, if you are subject to, if your limits are crossing the tax audit limit. In fact, originally it was talking about subject to tax audit. I think now they have brought in the number itself to make it. So if in the
this year onwards, they have told very clearly the numbers. Till before here, it was mentioned as applicability of 44AB.
Correct. There was a confusion. You know, we were having a confusion, but now this confusion is resolved by giving the numbers. So you don't have to worry about the last 6 years, immediate preceding year. So if you are doing the for 2021, if I was subject to tax audit in 1920, then in 2021, TDS provision is applicable.
See, to give a small example, one person was subject to audit for the first year.
Yeah.
TDS provisions were not applicable. Next year, his turnover was below 1 crore, but still TDS provisions are applicable because the threshold was reached last time.
Absolutely, absolutely. It is not in this year I may be small. In the last year, immediate last year I was big. So I am deemed to be big until I am proved to be small. No. If the auditor takes housing loan or car loan from a banking company, whether the auditor can accept the audit assignment of that bank. The threshold is 5 lakh rupees, sir. If the auditor takes housing loan or car loan from a banking company, look into the threshold. The answer is if it crosses that limit, you cannot do the audit of that particular, even for housing loan or car loan. They have not specified what type of loan. The moment you have taken a loan of more than 5 lakhs, you are debarred from, I think in the case of non-corporate entity, if that entity happens to be a non-corporate, if the lender happens to be a non-corporate, the ceiling has been brought down to 1 lakh rupees.
And the same thing applies to credit card outstanding also.
Any outstanding. So if you are State Bank of India, you want to get appointed as a branch auditor of State Bank of India, and you have a credit card outstanding with State Bank of India Credit Card Limited. It happens to be a subsidiary of State Bank of India. If you are disqualified from the holding company, subsidiary company, or associate company, you are disqualified from the other company. So that's how it has to be.
Just to add, ICAI has come up in a tie-up with the Bank of Baroda. So people doing audits of Bank of Baroda ensure that the outstanding is less than 5 lakh of rupees. Otherwise, you may end up in trouble because of that.
Yeah. And the best thing is don't have any outstanding of up to 5 lakhs.
5 lakhs.
Yeah. Hypothetically, if the shares held by grandfather transferred to a father as a successor after the audit has been accepted and commenced, can the auditor go ahead with the audit? A very good question. I think in the Companies Act, we have a 60 days window to make the correction. So I would suggest that in this case, either the father becomes a relative, so the father has to rectify this particular situation by selling it or transferring it to a person other than the relative, if possible. Better to sell within a 60 days window. So that is, they have given a 60 days corrective window under the Companies Act. Whether lineal ascendant or descendant is restricted to male line. I think, I mean, this is a very, I would say, a male chauvinist who has actually thought about an answer for this. I would certainly say that my grandmother, who is actually coming from my mother's mother, the question that it is there is whether only my father's line has to be taken into account or my mother's line also can be taken into account. This has been an FAQ. Unfortunately, our institute, very interestingly, in November 2017 or 18, I don't remember, IPCC, this question was asked. When this question was asked, our institute, and then they said the gift received from mother's mother, 1 lakh, and asked compute the computation of income. There they said gift received from mother's mother is taxable. Mother's mother is taxable because lineal ascendant does not include mother. And then a star they gave below say that an alternative view is also possible. An alternative view is also possible. I mean, I would say that the alternative view is the only possibility. I can prove at any court, I mean, at the lowest court to the highest court, I will tell the judge, but for your mother's mother, you would not have been there. You can't draw a line without that particular mother's mother being there. And for all that you know, your mother or mother's mother is the first person who would have seen you. I mean, I mean, we tell that they take care of my birth, and she's the one who would have seen me before more than anybody else. So therefore, I would say that definitely she is a relative. Shivaji Rao Bonsle, my client has following income for financial year 18-19. Please let me know if tax audit is applicable to him. Remuneration of income from firm bar LLP 2.36 crores, long-term capital gain 1.28 crores. So long-term capital gain will definitely not be taken into account. Any receipts from business or profession, and in this case, remuneration from firm bar LLP unfortunately is taken as a receipt from business or profession, depends on from where you received it. And since it is more than 2 crores, I presume that anyway, if it is a profession, definitely yes. And if it is a business also, it is yes. Unfortunately, the answer is yes. If I'm getting, it was held in the case of a PricewaterhouseCoopers partner, that the partner received remuneration of 75 lakhs from the firm and interest of 12 lakhs. That's all that he has, and whether he should be subject to tax audit because it is getting taxed under the head professional income. Technical answer to this is yes, and it has been held in the tribunal to be yes, and I'm sure it would not be a matter to go to the High Court for fighting. Rather, we get a tax audit report for that and get it submitted. If a person is a member of a club, can he be the auditor of that club? Okay, I would tell the club to not appoint him as an auditor. Well, that would be the answer to this. But as far as the member is concerned, again, I would say if he is holding any, because it comes out of the, it is coming out of the Companies Act. So club is not obviously a company. And as far as a non-corporate entity is also concerned, if he holds any interest, in the club, so by being a member, he is having a voting interest. So therefore, I would say that the answer is no. Will salary or wages paid in cash attract provisions of section 40A3? The answer
Yes.
is any debits to profit and loss account. Now we were talking about this only to profit and loss account item. Now it travels beyond profit and loss account item. It goes even to the acquisition of fixed assets, where you will not be able to claim the depreciation. And if it is in relation to land or immovable property, it will also be attracting 269 SS. I mean, that is another problem. Can a tax auditor revise his audit report once filed in any circumstance where he finds some mistakes in the report? The answer is yes. Please avoid the situation. The answer is...
But he'll have to recall the report and follow the standards on auditing, which is the most important thing. It is just not like you would file a revised return and you are done with it. It's not that easy.
Absolutely. But then the point I'm saying is this: since the revised report is given to the tax department only, see, I just tried to make it simple, because unlike in the financial statement, withdrawing an audited financial statement is very bad, and their compliances of all those things you have to make. There are so many, but here you would have given it only to the tax department, and you are filing a revised tax department, so you are anyway withdrawing, filing a revised one. I mean, that's how I made it look simple.
Yeah, this question got answered, but still it'll take for everybody's benefit. The viewer said it has got answered. Are the ICDS applicable for individual clients following cash basis of accounting?
The answer is no. And the question is ICDS applicable for a company which is following cash system of accounting? I mean, can a company follow a cash system of accounting? That becomes a very interesting question. The answer for that is the company cannot follow a cash system of accounting under the Companies Act. And in one of the Gujarat conference, they said, why not? I will follow cash system of accounting for income tax purpose. Income tax does not debar me. I will follow for financial statements, I will follow. I said, if you are preparing 2 accounts, it is fine, sir. Okay. Then the reporting format and ICDS are not included in the guidance note. Please.
In fact, there is a technical guide given, which I've shared it in the materials also now. You can take input from that actually. So today's link, what we have shared, contains guidance note on 44AB, technical guidance on ICDS, the UDN, which contains SAE 3400 and SRS 4400, and separately also we have put it. So we have kind of given a complete,
package. You have given a home kit.
Yeah.
CKD. CKD. Only thing is complete knockdown kit you have given, but they have to. You have given the kit. The knockdown they have to do.
And the materials of yesterday's speaker and today's will be uploaded after some time. Kindly bear with us.
But the point to be noted is, I really appreciate your efforts, Dungar Chanji. You have this online and instantaneously. That makes a resourceful leader really resourceful. Yes. Sohan Lalji, audit fees is due for 3 years. The client changes auditor. The new auditor does not communicate to previous auditor. The client does not give details of new auditor. What is the remedy to the previous auditor? I think this is a very good question. If you do not know who the previous auditor is, maybe I presume that this is a tax audit, because in the case of a company, you will obviously come to know once you do the search. So in the case of a tax audit, maybe it would be a good idea to write to the institute only. And institute would be able to help us with the copy of the income tax department. Definitely the department also will be able to give out. The department is under no obligation, but the institute will definitely take care of this particular situation. Ramdevji.
In fact, I have a small suggestion to all the members. Kindly, as a matter of practice, do write NOCs to the previous auditor. It is a matter of professional courtesy. And also I request members to respond whenever such letters come. I've seen people, okay, they have received the letter, they keep it in the file. Kindly respond to it, I have received of the letter and have no objection. Maybe a small email also will do, but kindly do that. So there is a healthy communication which goes among our own fraternity.
Then I would put it a step more. Wherever possible, please talk to the auditor. See, writing a mail is, a very impersonal way of, the requirement of the standard. I think we are more than, why are we called? I would like to, if I may be permitted, I would like to say that we are fellow members. This brings out as a fellow company. You know, what is a fellow subsidiary? Abhishek, you're trying to say something? You have to unmute. Okay. A fellow subsidiary means a company two subsidiaries, a company has got two subsidiaries, relationship between the two is fellow subsidiary. No, like that, we are fellow members of the institute. Chand, Abhishek, all the 570, 510 members participating are all fellow members of the institute, because the institute is the holding company. We are all the subsidiary of that. So after all, like in a parent, two children are considered to be brothers. So I consider fellow subsidiaries are brothers, and we are all brothers. So nothing wrong in taking up a phone. I mean, if he's a real respectable senior person, go to him, seek his blessings, and understand what his experience is before you take the audit. That would be the best way to do the audit.
Gururaj, I totally agree with you, and I am also of the same view. Only thing is, I gave the minimum standards, and you took it further to tell, to talk and kind of get things clarified.
Perfect, sir. Yeah. Ramdevji, where stock details and records are not available, like in the textile trade, what is the comment needed in 3CA or 3CB? See, stock details and records, if they are not maintained on a day-to-day basis, you mentioned that fact in that 16-point program which they have given, you can give that. But the year-end stock has to be physically verified, and proper valuation as per ICDS 2 or AS 2 has to be complied with. So that is the answer for this question. Regarding 216 and ST, whether 100% verification is to be done or test check is sufficient. I also already answered this. 216 and ST is not like 40A3, is not like 269 SS, not like 269 T. In fact, our guidance note does not talk about 269 ST, because 269 ST came after the guidance note. Guidance note on tax audit. Our institute has to come out, and I am sure that, as I told you, 269 ST has got PTE. I mean, I always talk about per person, per transaction, per event. Okay, per person per day is very easily be ascertainable. So therefore, the system can help me out. But if it is per transaction or per event, then for a one particular bill or a one particular event, if it is spread out between different dates, there is no way that the system can throw me the benefit. So therefore, test check is a possibility. That if it is large, and this, again, I'm telling you, whenever you are doing the test check, you should first come to the point that internal controls in the company are good. Then voluminous. Then ask the client only to fill it and give it to you. Follow up, and then go in for the test check. Test check cannot be a straight away answer for that. Shivaji Rao, please clarify on following as to what dates have to be given in 3CA: date of audit report and place and date of signing audit report. There are two things in 3CA: date of audit report and place of audit report. What does that mean, Ningarchanji? You have any idea?
No, I think date, there is no ambiguity, because it is a date when you finalize and sign it. But the place, maybe I'm just trying to assume that, the client may be somewhere else and today you're signing from some other place, especially the bank audit. You belong to a place, but you sign which city or the place you should be putting.
No, but are there two dates asked in 3CA? Date of audit?
No, there's only one date.
No, sir. I think to clarify this point, what happens is you fill in the date manually, but when you digitally sign it, the timestamp date comes. So I might fill the form today. I might sign it 3 days later. There will be a difference in the date. Maybe that is what
that is understandable. I think that should not be a
I think it is then the manual date which takes over. The digital signature is only
the date of signing is the date of audit report. The date of uploading is the date of uploading. Then, correct. Like that. Yeah, there could be a mismatch.
But can you clarify on that place thing? Say person is.
I think the place is. Please understand the place and date. Let it be the date and place you have actually dated or actually been. Wherever you have been, that is the place. If you are if your client is in Bangalore and you are in Bangalore, let him sign it in Bangalore and put as Bangalore, and let him say that is on 1st of August and it has come to me. I have signed on 2nd. Let it be shown as 2nd. I have signed it in Bangalore. There could be a mismatch between the two dates. I mean, this is particularly so for financial statements. In financial statements, it could be they are into a different place. I am in a different place. So I have signed like that. Yeah. Physical verification of closing stock was not done by the tax auditor due to COVID-19, and therefore should the 3CA, 3C be qualified? I think instead of straight away qualifying, our institute has come out with the guidance note on how to, the WASB has come out with the guidance as to how to deal with such situations. While verification of physical verification is the best mode for doing the stock verification, there could be alternative procedures based on which the auditor can satisfy. But in any case, if you have followed an alternative procedure, it is better that you say that in the other matter paragraph and proceed is the answer that the AASB has given. Yes, sir. Should loan by way of journal entry be reported in column 31A, or is it enough to mention it in form 3CB that loans received by way of journal entry is outside purview of 269SS on account of judicial decisions? I think both the things are possible. If you are following the judicial decisions as I had reported earlier, you can say that and say that journal entries are excluded. But however, our institute has almost there is one more FAQs on tax audit report by the institute where they said even journal entries have to be reported. So that depends on your view. If you want to exclude journal entries, you can do that by giving that particular note in clause 3 or clause 5. If the previous auditor of a new client recently died, to whom we have to ask for the NOC? I think, if it is an individual, I don't think I have the answer for this. But if it is a firm, of course, you send it to the firm. If it is an individual, is there anything that you know?
No, my suggestion is still write and record that you have did your duty actually. It is always better that whatever address you have, you please write a letter and close it so that you have did your job actually. That's all.
Yeah, that is one way of telling. I mean, that's the best practice. But then, we always say death is a public notice in itself. So therefore, resignations are not required and all those stuff. That's correct. Resignation. But yes, I think I agree with you that it is better to.
No, because what happens is even for the institute to get this updated, it takes some time actually. So it is better to record it and you are kind of safe.
No, I think more than the institute. See, the point is there is no person to complain.
Correct.
That is
no object.
No person to object. Unless that firm has been taken over by some other person by paying goodwill and all those stuff.
No, Gururaj, my vague thinking, maybe the person still has not paid the fees and that might be outstanding. The legal help tomorrow they can say that this so-and-so fees is pending. You can kind of settle that at least.
Double thumbs up. Very good. Fair market value has not been defined under Income Tax Act for Section 28. How to audit and document for the same? I think then if it is not being provided, yes, you are right. I think like Rule 11 UA or whatever, there is no such thing said. So fair market value should be a reasonable fair market value. As long as you are it is plus or minus with a fair market value, that should be fine. Reported with especially I was talking about biscuits. If it is a glucose biscuit or a gold biscuit, if it is a gold biscuit, then take a proper valuation from the approved valuer. Sir, can a professional firm pay tax on 50% income and disclose partner salary as nil in the personal tax return, since partner salary is not allowed on 50% presumptive income? No, professional firm pays tax on 50% income and disclose partner salary as nil. Yes, in the personal income, but I'm not able to understand. Since partners...
He says there are no salary put in the partnership firm, the professional firm.
So I'll just explain. When you're going on a presumptive basis, no expenses are. You don't have to prepare the books.
You cannot. That 50% or 8% is after allowing the allowable expense.
So he is saying, I have not shown any expense in the partnership firm. I have not claimed it.
Okay.
I claim 50. Yeah. So when it comes to the personal books of the partner, does that mean I have not received salary at all, or do I have to admit I have received salary?
No. Then let me put it like this. As far as the firm is concerned, it is okay. As far as the receiver is concerned, if he has actually received it within that 50%, then he has to offer it for tax. He cannot say the firm is not allowed, so therefore don't tax me. It's not an answer. For UDIN to be generated for attestation of ITRs for bank loan purpose. The answer is yes, sir. Any attestation.
Yeah, only thing is ITR only you should attest, and that you can put true copy. But other statements unaudited don't sign. If you are signing, you use this SAE 3400 or the SRS 4410, whichever is applicable.
No, I think Dungarchanji, I put up a slide to say ITR should not be certified as true copy by the auditor. Is the institute's FAQ on UDIN. So they have made it very clear.
The initial FAQ said that for true copies, you need not affix UDN. That FAQ was removed actually.
I don't think so, Dungarji. Let me.
Fine, we will get back to the speaker
Sure.
because the initial FAQ said that for true copies it is not required. They didn't speak on ITRs. They said for true copies UDN is not required.
Especially for ITRs, the FAQ has come out saying that you should not give a certified true copy on the ITR itself. You should give a certificate, and for that certificate, you should generate an UDIN is the answer.
So the standards on auditing will have to be followed when you are doing that.
No, I mean basically you didn't issue that is yes. And when you are giving the certificate, you have to follow the standards here.
No, because for this bank loan purposes, what happens is, sir, many people just with their unaudited statements come and say, I'm going for a bank loan. Kindly, certify this or attest this.
No, there you have to give it only not on the document itself, on a separate certificate on your letterhead is what it is what is told. Tax audit is covered by Section 44AB and thus applies only to business income. Is Form 3CD calling for details other than what is relevant for computing the income under profession is against the provision? I think good question. You can only go on a writ on this. I don't want to challenge on this particular thing. So if as a good boy, I will answer whatever they say. If you feel that it has to be challenged, it has to be taken on a writ basis. Yes, sir. If the repayments are done by the partner of a firm on behalf of the firm and is passed by way of a journal entry in the books of the firm exceeding specified, should we go beyond that books to verify the mode of payment for reporting? Answer is yes. If you are finally you are recording that in your books of accounts, so whatever is in your books of accounts, it may be a journal entry. The journal entry will have to be reported for 269 SS is the plain answer, unless you want to use that case law, in which case you have to use that clause 3.5 to say I am not reporting journal entries for 269 SS. Is payment of salary exceeding 10,000 rupees per month paid in cash with each payment not exceeding 10,000? Anyway, it is per day per person. Per day per person. So that should be okay. Whether a contractor filing ITR under 44 AD at 8% can claim partner's interest and remuneration? The answer is no. Earlier you could have claimed, now that 8% is deemed to be within that partner's remuneration and interest is within that 92%. If not, what is the alternative to claim such an expense? If the way is, if you want to then get it tax audited and you can
auditor.
Yes. And that audit is not covered under the number 60 there. Urgation. Whether Section 216 ST is applicable in respect of cash gifts received on occasion of marriage, function under cash received relating to one event or occasion. The answer is yes. The answer is unfortunately yes. Gift received from a person. That is very interesting, from a person. So that could be small. I have received multiple gifts, but not from a person is the one answer that I can think of.
Yeah. But it speaks about one occasion also that you get trapped there.
Yeah, per event or per occasion, yes. 2 years back, one of my clients received advance against sale of land. Now it is showing as deemed income. No, I mean, if you will have to now decide whether it is forfeited or is it returnable. If it is forfeited, and I mean, if it is lying for a long time, then it gives to a doubt that it is as good as forfeited. So you please write to the other person or have a document to find out. Mostly this can go with a management representation only. Why are you holding this? Because after 3 years, can you still consider law of limitation coming into picture? Are you really returnable and things like that? So if it is up beyond 3 years, then I think the law of limitation could come in, and under 5629, it could be considered as a deemed income. Please explain how to document oral evidences. I think, see, you will have to take on the written evidences only. Oral evidences, I'm sure you'll have to go with the recording of the situation. And then if you say that's not my voice, then it could be a... So therefore, you please, whatever you want to have, for the moment, audit documentation is, SA 230 does not recognize oral evidences unless it is in the court of law. Good afternoon. Okay. 269 ST is applicable in toto to partners with the firm. The answer is yes. It is also applicable to partners in the firm.
So coming back to the 269 ST point regarding
Yeah.
the gift received at the time of the wedding,
Yeah.
my opinion was that it is not taxable because practically I am
Yeah.
not aware. I am standing in my reception, guests are coming, they are giving me gifts and going. I am
Yeah.
thinking they are kind enough to give me iron board or something like that. But they have given me cash 1,000 rupees every month. So at the time of receipt, as a person receiving it, I am not even aware what I am receiving. Yet I have to pay a penalty of 100% of what I have received.
Yeah.
So that seems to be practically something that will be impossible to comply with, is what I felt. So I thought the occasion of marriage, etc., it should not arise. But I don't. Is there any guidance note or something on this?
While I agree with you, Dungarchand answered it in a different way, because in his community, they open the cover and immediately write down how much they received. I think we have to follow the community now.
Accounting is everywhere. How fast or how late you do it. Gururaj, accounting is everywhere. How fast or how late you do it.
No, you are doing it very fast, and mostly before the person gets off from the stage. So we have Abhishek. Our community has to follow his community. That's all. Comply with 216 ST.
To be honest, it is not that fast, but maybe with what Gururaj is telling, maybe the person gets down, he gets a message, thank you for contributing. I think we have run out of time. Gururaj, thank you so much. Thanks for taking the entire gamut of questions relating to tax, UDN, to ethics and everything. Thank you so much for a wonderful presentation. We have overshot by time by 36 minutes. Nevertheless, it was a wonderful presentation and nice time. A Sunday worth invested for everybody. Abhishek, do you want to add something?
Naresh ji, we can, yeah.
Sir, you have to unmute.
Naresh, you're on mute, sir.
Sir, unmute. Naresh, sir, unmute. Now you can speak, sir.
Yeah. So I just wanted to thank Gururaj for sharing so much of knowledge and clarifying all the doubts. It was pretty interesting, and I'm sure with which maybe when we have this tax auditing again, we'll also invite him again for a detailed discussion later on, next month or so.
Thanks, Gelly sir, for pushing us now and then for doing some programs.
Thank you.
Yeah.
Right.
Abhishek, over to you for a well-deserved vote of thanks.
Yeah, truly wonderful presentation, Gururaj Acharya sir. It's a par excellence, really wonderful presentation, and I must say I have a feeling this presentation will stand the test of time, which means for next 12 months, our members will be watching this presentation constantly. That's the sort of thoroughness, the examples, practical scenarios, everything that you have covered is very, very useful. I'm really grateful to you, sir. And we definitely, as Gelly sir rightly said, I think closer to the tax audit dates, we may have another program, and based on your availability, we'd love to have you again for the benefit of our members. Thank you so much, Gururaj sir, for your time and valuable feedback. I also like to thank CA Naresh Gelly, Chairman of Direct Tax Committee, and of course our dynamic Chairman, CA Jain, who's leading wonderfully from the front and allowing us to have and organize together successful programs like this. So,
yeah, for the recording of these programs, we would like to announce that we'll be sending an email to all the people, and also it will be put in the SIRC website. Once things are over, we want to share the knowledge and the materials. Thank you.
So thank you all. Stay home, stay safe, take care.